today. We hope to make your afternoon and evening very exciting, and we hope that we add value. When everyone goes back to their home, we add value to your investment thought process. We will be starting in the next 10-15 minutes. So thank you so much.
Good afternoon, ladies and gentlemen. Good afternoon, ladies and gentlemen. On behalf of Wealthy Nivesh, I extend a very warm welcome to all of you to Nivesh Milan Oman 2026. It's truly a pleasure to see so many of our esteemed clients, partners, well-wishers, friends, and family members gathered here today. Your presence makes this event far more meaningful than just an investment conference. It becomes a celebration of relationships built on trust. At Wealthy Nivesh, we often say that we have two kinds of patrons: friends who became clients and clients who became friends. Over the years, this philosophy has been the cornerstone of our growth. The confidence you have placed in us with our hard-earned wealth inspires us every day to raise the bar of excellence. Special word of gratitude to our patrons from Oman. The trust and encouragement we have received from the NRI community here and has been phenomenal, and we are deeply thankful for your continued support. We are blessed to have acquired 20 HNI and UHNI families in last 5 months from Oman. Now I would like to welcome Mr. Ashish Gatani, Mr. Vinod Shah, Mr. and Mrs. Kure Sampath, Mr. Mohammad Naeem, Mr. Nitin Verma, Mr. Herman Parashar, Mr. Rajendra Verma, Mr. Siddharao Vengela, Mr. Manimaram Marirappa, and Mr. Rahul D. Vashikar. As India continues its journey towards becoming one of the world's most influential economic powers, opportunities of global investors, especially NRIs, are evolving rapidly. Today's event has been thoughtfully designed to help you understand these opportunities, navigate challenges, and make informed decisions for your financial future. Over the next few hours, we will discuss Wealthy Nivesh journey, India's growth story, risk and reward across India and global markets, investment opportunities through international gateways, NRI taxation, multi-asset investing, succession planning for NRIs. We are privileged to have some of the most respected industry experts with us today who will share their insights and perspectives. So without further ado, let's begin the exciting afternoon of learning, networking, and meaningful conversations. To begin our event, we start discussion India's growth story and Wealthy Nivesh journey. India stands a unique point in its economic journey driven from demographic digital transformations, infrastructure developments, and increasing global influence. To share this perspective on India's growth trajectory and the opportunities it presents for investors over the coming years, I invite Mr. Ankit Garg, CEO of Wealthy Nivesh. Ladies and gentlemen, please join me welcoming Mr. Ankit Garg with a warm round of applause.
Good morning, everybody. So this is our 4th edition of Nivesh Milan, where we try to bring our investors and industry voices on one platform. And believe me, every time the biggest challenge is getting people attend the session. So thanks everybody for joining us on a Friday afternoon. So a huge round of applause for everybody who joined us. So yesterday also we were, a lot of our well-wishers over here were pointing out this thing only कि यार Friday को कर लिया, पता नहीं लोग आएंगे या नहीं. And until 11:55, I was like, I hope it turns out good. But so thanks a lot, and really appreciable work by our team in reaching out to you and keep reminding you. Growth. So when we talk about pillars of Wealthy Nivesh, I think there are 3 guiding principles that we follow: trust, simplicity, and growth. So trust is, I think the best manifestation of trust is that all the investors in our company are our clients also. When we raised the seed money for the company, when we raised another $1 million round for the company, we were calling clients and they were putting in money. So that shows that they have got trust in us. Simplicity is that when we, in this industry, unfortunately, when it comes to talking or communicating, we confuse it a lot with numbers. And not everybody is as much number savvy as some of us over here are. My favorite case study is The Psychology of Money, the bestseller on how to manage your money. It doesn't mention numbers even once. And probably that's the reason it became such a global bestseller. Now, when it comes to growth, we look at growth in every aspect. We look at growth, how our colleagues are growing. As a matter of policy, we hire freshers only, except for 1 or 2 very rare cases where we knew the people in person and we knew that there won't be any clash of value system. Because for us, apart from intention, hard work, etc., value system also matters. And we believe that getting freshers can help us to mold them in our own value system. But how do we quantify growth of Wealthy Nivesh? So I'm going to present you some numbers on the same, how we have grown over the last 3.5 years. So multiplying hands means we should keep on growing as a team, as a collection of professionals. This is the team strength. We have been growing again and again, and right now we are a team of 28 professionals. Our idea is to take it to 50 people in this year itself. This is the growth of AUM that so in spite of all the market cycles, etc., we have seen regular growth. And we benchmark us in relation to the industry. So last year, mutual fund industry net sales, net of M2M profit or loss, grew at 8%. We grew at 40%. So our idea is we should be growing at 4 to 5 times of the industry growth. And until now, we have been able to achieve it. If I talk about financial year 24-25, our net sales numbers were comparable to one of the leading banks in India and also one of the biggest and oldest wealth players in India. I personally believe that the easiest way to make money in India is through SIP, to create your wealth. And that's why we have a strong focus on SIP books. We process 1 bips of SIPs in India. So SIP book in India is 30,000 crore. Right now we process 3 crore worth of SIP book. This is our gamut expansion. When we started, we had mutual funds, PMS and AIF in distribution model only. Distribution model means we suggest you products of other players. That was in Nivesh Milan first, which we conducted in June 23. Then we did Nivesh Milan 2, which was in Feb 24. By then, we had unlisted shares also, we had startups, investment also, corporate FD, bonds and gift city products. Now the last Nivesh Milan that we had in Dubai, by there we had Dubai setup. And now we are in the process of starting our operations in DIFC also. The idea is to have an Oman office next year as well. So we believe in money plus approach. Money plus approach means that we should not talk to you about investing your money only. We should also talk to you about related areas of money management. What are those? Those are dematerialization of physical shares. So a lot of us have old physical shares which need to be dematted. We help you with that also. We help you with tax planning also. Shubham, my very good personal friend, will be taking a session on how taxation affects NRIs. We'll be having a panel discussion on the same. We help you with family legacy planning as well. So whether you should have will, or you should have family trust, or you should have a company to manage your family assets. So and apart from that, we also help you with education counseling. In case you have got kids who are about to move to college and you need some guidance on what kind of colleges and courses they should apply for, we have got facilities for the same as well. And of course, migration by investment, whether you want to move to Europe or US, other countries, we help you with that also. We have a fully functional Android, Apple and web portal from where you can do everything yourself, but we assign you an RM who can handhold you in your journey with us. So the RM will help you to onboard as a client, and RM will help you to initiate the transactions. But of course, transaction has to be validated by you only and payment has to be made by you only. These are some of our media coverages. This is about our funding news, which was covered by VC Circle, ABP and Outlook Money. This is about starting our operations in Dubai. These are some of the recognitions about how our portfolios performed during down cycles of the market. I'll be showing you how we select mutual funds and how we build your portfolios. I'm also an author in HT Mint, which is the second largest business newspaper in India, and I write over there on topics related to wealth management and money management. One article that I wrote was how to choose your wealth manager and then how you should manage your money. All those articles we will be sharing in the packet that we will be sharing with you today. These are citations. Me and Aditya are often cited by Economic Times for industry news, etc. So we believe in empowering our clients also. So idea is to keep sharing knowledge, and for the same we have podcast series also. Last podcast that we did was Mr. Nilesh Shah, who is MD CEO of Kotak Mutual Fund. And our idea is to have one monthly series with fund manager every month, one client webinar with the fund manager as well, where clients can talk to fund managers directly about their questions, etc. And then we do one podcast with clients also, where we talk about their career journey, their money journey, and their experience with Wealthy Nivesh. These are some of the events that we have conducted. And this is about the team. This I'll cover in my next PPT. So this is about Wealthy Nivesh. And now I'll take you through how we build your portfolios. Any question until now? But can I ask everybody, what is your expectations from the sessions today? Any specific, or it's just open-ended expectation on what we present? In case you have any specific expectation, we'll love to cover it. We have got very senior speakers today. We have got Anand here, who is from DIFC, ICICI Mutual Fund, and we have got Vikas also here from DSP. Sorry, I'm bad with names. So this is about the team. The senior most founder is Dr. Vikas Agarwal, who is Bank of America Chair Professor in Georgia State University. He has written some 40-50 research papers on mutual funds and hedge funds in America. And he is the one who helped us to develop the algo, which I will be showing you in coming slides. Then I have got 12 years work experience in wealth across India and UAE, and last I was regional head in HDFC Bank's wealth management team. Aditya over here, Aditya is IIT Roorkee BTech and ISB Hyderabad. And Aditya was also part of wealth management team at HDFC Bank, and he has, it's very relevant for many of the participants over here. He has also worked as a consultant in oil industry. Srishti is operations head. She looks after operations, and she is a BTech CS from UPTU. So when we started this firm, there was no reason for us as such to start something. Aditya built an algo whose results were too impressive to be true. So I was very dismissive of the numbers initially, but then he persisted. And then I will discuss this story with you one-on-one. I don't want to bore you with a very long story. And then we realized that there are certain gaps in how wealth management is delivered in India. And we tried to fill those gaps through whatever we could do through technology and human intervention, one by one. So like one very recent practice that we have started is about portfolio reviews. A lot of times when markets go down, wealth managers don't talk to their clients thinking कि client कहेंगे यार returns नहीं आ रहे. What we have done, we have made it mandatory for all our wealth managers to talk to client on portfolio review once in 2 months. And that is tracked at central level automatically by use of technology. So when we talk about traditional players of wealth management, they follow risk optimization and customized approach. That they will sit with you and they will try to understand your requirement and then they will share a proposal with you. We also follow those two ethos, but in addition we have two more ethos, which is algos. So whatever we suggest to you is backed by some algo, by some research. And alpha oriented. Alpha oriented means that we should be able to generate alpha over and above the benchmark or market returns. So we can't control market returns, but we can try to see how we can generate higher returns than the market. How we do it? We do it basis asset allocation, basis valuations across different asset classes. These are the solutions that we provide to you. Mutual funds, SIF, PMS, EIF, unlisted shares, bonds and corporate FD, startup investments, gift city, recovery of shares, concierge, education counseling, estate planning and treasury. These are the guiding principles so I'll cover these products one by one. So first I'll cover the pivot product, which is mutual funds. These are the guiding principles that we follow for mutual fund selection. One is asset allocation based on investment horizon. So if you come to us and say कि अंकित तो small cap में करना है 2 साल के लिए, we will advise you against the same. Second is mutual fund selection based on WN Quant, which is our proprietary quantamental algo. Quantamental means there is quantitative and human component for the same. AMC level allocation limited to 20%. I won't like to take the name, but there was one AMC which was coming highest in all categories in our algo, in every category. So if we would not have followed this rule, then 100% of clients' money would have gone into that single AMC. But eventually that AMC ran into some issues and thankfully we didn't have 100% allocation over there. Portfolio level approach. Portfolio level approach means you start with us with say 100 rupees. That 100 rupees become 130. Then you say ki Ankit, we need to put in 15 rupees more. The typical practice is ki your advisor will send you a new proposal for 15 rupees. But we see how that 15 rupees get in sync with your 130 rupees, existing 30 rupees. That's called portfolio level approach. Multi-cap allocation means we do allocation across large, mid and small cap. Aditya will be covering this in detail, but I'll tell you when we started, out of 100 rupees, 60 rupees was going into small and mid cap. Why so? Because at that point of time, the relative valuation of small and mid cap as compared to large cap was much more favorable. But starting from June 24, we started shifting money from small and mid cap to hybrid funds. Even now, if you want to have a long-term kind of portfolio, we do allocate your money to small and mid cap. But we decide, basis market conditions, how much of 100 rupees will go into small and mid cap, and also how that will be deployed. How means whether it will be deployed in lump sum or it will be deployed in staggered manner. And these are some of the practices which have helped us to generate the phenomenal kind of alpha which we have been able to generate. This is the block chart of how it works. We have got a data API from one of the credit rating agencies in India, which gives us certain data points on 4,500 mutual funds in India. Those data points gets fed into WN Quant, which is our proprietary algo. WN Quant gives us composite score against each mutual fund. So I will tell WN Quant, tell me top 5 mutual funds on composite score. It will tell us those 5 mutual funds in large cap category. Then we will do subjective evaluation. We will see ki how is the fund manager, how big is the team, etc., etc. Basis that we will make a list of mutual funds. And then basis market conditions. Market conditions means whether I should go 30% in small cap, whether I should go to small cap, whether I should go to silver, whether I should go to gold. Of that day, we will decide what will be your asset allocation, relative allocation of those mutual funds or asset classes. This is WN Quant. So the first and foremost, everybody needs performance only when we invest money. So we do ranking basis performance parameters like rolling returns and alpha, upward and downward capture ratio. Upward capture ratio means when market was going up, how did my mutual fund performed? And downward capture ratio, vice versa. Out of these two, we give higher weightage to downward capture ratio because we believe 100 to 80 is minus 20%. But to go back from 80 to 100, you need to grow by 25%. So if you can cap your downside in the short term, then in long term, you will have higher returns. We also believe that risk and return always move in tandem. So we do rating basis risk return parameters like Sharpe, Sortino and Trenel ratio as well. This is attribution analysis where we see that how has been returns of the fund generated, whether they are fluke or there is a system behind it. How we do it? We see how much of the returns have been generated due to markets. जब मार्केट अच्छा जा रहा होता है सबके रिटर्न अच्छे आ रहे होते हैं, सबके पास कहानियाँ होती हैं, मैंने वहाँ इन्वेस्ट किया, इतने टाइम में इतने का इतना हो गया. एंड seasoned wealth managers say कि when you start listening stories about any asset class, people bragging about that asset class in social parties, that's the time for you to come out of that asset class. But having said that, we see how much of the returns have been generated due to markets and how much due to decision making of the fund manager. How do we quantify decision making of the fund manager? We look how did he deploy his money across asset classes. Thankfully, so around 9 years back, SEBI standardized all the mutual fund categories in India. So if you are calling yourself a small cap fund, you have to invest at least 65% of your money in small cap equities only. And again, thankfully, SEBI also defined what is a small cap. Before that, there was no universal definition for the same. But if you are managing a small cap fund and a small cap is going through a rough patch, where are you investing the rest of the 35 rupees? 65 you have to invest in a small cap only. But did you take a call to invest 35 rupees into large cap when small caps were not doing good? That defines how your asset allocation has been good or bad. And last but not the least, where eventually you invested money. That 65 rupees that went into a small cap, which were the equities that you paid because of which this return came. Then we do subjective analysis. So first two steps were objective analysis where we generate a composite score and we see attribution analysis, etc. The third step is subjective where we see how deep is the team. Is it a single man show or there is enough number of analysts, etc. in the team? And how do we do it? We have told our RMs from mutual fund sides that we won't recommend your fund until unless you get us on a meeting with fund manager and their analyst team. So that gives us an opportunity to analyze whether returns are by fluke or there are people behind it, or whether there are systems behind it. Even if there is a good team of people managing it, whether they have put in systems so that if star fund manager is not there tomorrow, whether it will continue working or not. One of the insights shared by Professor Vikas Agarwal was that when fund AUM becomes very large, its returns either get stagnated or they keep on coming down. So we also take a call that especially the small and mid cap funds that we recommend to you, they should not be very high in AUM. Certainly, there are certain funds which have proved to be aberration to our analysis, but still we are more comfortable suggesting funds with certain minimum and maximum corpus. SEBI 2 years back did a stress test for small and mid cap funds. We have been doing it from day one. And we also look at quality of the assets where mutual fund invest in form of ROC, ROE, etc. Then we do back testing for last 10-15 years. And basis that we make standard baskets. The idea of having a standard basket is first, हमारा काम कम हो जाता है. We don't have to track everybody's portfolio separately. We just need to track those baskets, standard baskets. And whenever there is any requirement for change, our team will reach out to you. That will be a centralized activity. So if tomorrow we give an exit call in any of the funds that we had recommended to you, your respective wealth manager will reach out to you and tell you कि sir इसमें ये change करना है. And it will be captured in a CRM activity. So we will keep on asking them कि how come out of 60 clients, we have a mandate not to give more than 60 clients to single manager. Out of 60 clients, why 5 clients are still pending to take action? Typical answers are, sir, the client is not reverting back or client is not comfortable doing it. Then we ask them to drop an email. And because it's a very closely knit portfolio, so there is higher alpha also and higher Sharpe ratio also. Sharpe ratio tells me if I'm putting 1 rupee on the table, what is my incremental return against that 1 rupee risk? This is another algo that we developed for the review of your existing portfolio. In addition to this algo, we have certain more parameters which I will be covering as the last session for the day, where we will show you what all parameters we cover when we review your existing portfolio. So over here we show you some standard matrices like what is your geographical allocation, best and worst of the returns, asset allocation, etc., etc. But our USP is this one, where we show you risk return metrics of your existing portfolio. And how do we do it? On x-axis, being engineers, we are in love with graphs. On x-axis, we plot risk, which is a standard deviation. And on y-axis, we plot rolling returns. And then first we plot the benchmark, which can be standard index also, it can be blended also. Blended means ki you tell us ki Ankit, I have got 30 rupees in fixed income, 10 rupees in bullion, and rest of the money in equity. So we will make this index in same proportion only. Then we plot your existing portfolio. So you can see how your portfolio is performing as compared to benchmark on risk return matrix. And then we plot all the underlyings. So the right hand side, upper side is high risk, high return, which is typically equity funds. Lower side, left side is low risk, low return, which is typically debt funds. But if you look at the red one, this one has got very high risk, but very low return. So these are some of the insights that we share with you when we do your portfolio review. These are PMS and AIFs that we recommend to you. So Shubham will be covering a session on NRI taxations for investment with me and Aditya. But for NRIs based in Muscat, mutual funds are more tax efficient as compared to PMS if PMS invest into direct equity only. Because then you are taxed for direct equity, while in case of mutual funds, there is no taxation subject to production of certain documents like TRC, etc. In addition, we also advise you on some pre-IPO funds where you can take exposure to unlisted space through a professional fund manager. These are beyond equity AIF, so we keep on listening ki Ankit yaar equity bahut ho gaya, ab kuch aur karwao. So these are some of the funds which invest either into fixed income or commercial properties. The minimum ticket size is typically 1 to 2 crore. But the good thing is, so I was talking to engineer sir and he was telling me ki being in NBFC, I know cash flows, etc., of the companies. It's same here also. Kotak, HDFC, ICICI is managing these private credit funds, and being bankers, they know how cash flows are going and how risk is placed in the companies that they want to give money to. These are unlisted shares that we recommend to you. Gift City, so a lot of queries have come to us for Gift City also. We are one of the first distributors in India to recommend Gift City products. Some of the benefits are, one is Indian jurisdiction, that's more, typically people have more comfort in Indian jurisdiction because it's ultimately our motherland, we can challenge government over there. The second is global exposure. Through Gift City, you can invest into virtually any geography or any asset class in the world. For you, it's tax-free exposure. Fourth is cost optimization. So if you compare the costing of those Gift City products with typical products in Middle East, cost component will be lower, and we will ensure that we make it even lower for you. Fully repatriable, so you send in money in dollar, you get money back in dollar. These are some of the schemes that we recommend in Gift City. We have a fully functional Android, Apple and web portal from where you can do everything yourself, but we assign you an RM. At no point of time money comes to us under distribution model, but in PMS model, money comes to us and we manage the money. And payment is processed by Bombay Stock Exchange subsidiary, which is Indian Clearing Corporation. In any event-based circumstance, we reach out to you and we do monthly review and monthly sharing of reports with you. These are some of the media coverages that I have already talked about. And these are the testimonials. Mr. Rohit D'Souza runs his own investment firm in DIFC, but his Indian portfolio is managed by us. Mr. Zulfiram is one of the leading businessmen in Dubai. Mr. Gulistani is ex-HR head of Altaya Group, which is one of the leading industrial groups of Dubai. And Mr. Harsha Pai is a very senior KPO founder in India. That's all. Now I'll bring my favorite PPT, which is about India's growth story. So, a very typical conversation with people in Middle East is that when we came to this country, it was at this stage, and thanks to the hard work of the people and of course the vision of the rulers, it is now at this stage. They have seen the progress of the country in last 10, 15, 20 years, 25 years. Somehow I feel that we miss that thing for India. We don't, give enough acknowledgement to India, the kind of growth that we have seen in India in every aspect. So I'll try to cover some of the numbers which will bring some positive perspective to India's growth story of last few years. So there are different parts to this PPT. The first one is India going down. So the rankings where India is going down. First one is global GDP ranking. So it's a sort of oxymoron that we have used. India going down means good thing, in good manner. So while GDP ranking was 13 in 1990, it's estimated to be 3 in 2030. Recently we were about 4, but because of rupee depreciation we became again 5. So if you look at poverty numbers in India, they have come down to 2.3%. When I was in school, that used to be around half. So half of the people in India used to be poor as per World Bank definition. That is down to 2.5% only now. Multidimensional poverty index. So poverty definition used to be a very big point of debate ki how much amount you should define for poverty line, below poverty line. Multidimensional poverty defines it in terms of access to medical, education, etc., in addition to your monthly or daily income. Even in multidimensional poverty index, from the highs of 55% just 20 years back, we are down to 6.9%. Unemployment. Every single opposition party in India, whenever they are in opposition, they keep on saying this thing, महंगाई है, बेरोजगारी है, महंगाई है, बेरोजगारी है, but we don't check the numbers ourselves. And this is across all the parties. Right now, the unemployment in India is 4.2% only, even after all the shooting up during Corona time. Illiteracy rate, I was born in 1986. At that point of time, majority of the Indians were illiterate. Now, even that number is down to 19%, and we have already achieved universal school enrollment, which means all the school-going kids in India are already in school. So whatever the illiteracy we can see over there is about older people, older generation. Fiscal deficit, one of the major macros which is used for analyzing any economy is fiscal deficit. Over there also we have brought it down significantly from Corona days and 2008 crisis. And it's very relevant because fiscal deficit defines capability of government to spend money on capex also, and it also has direct impact on inflation as well. Dependency ratio means those people who are not working and they are dependent either on their kids or parents for income. That dependency ratio is also coming down drastically in recent times. Ease of doing business, it used to be 150 and now we are down to 63 as per the last ease of doing business ranking. GDP in billions, from 327 in 1994, we are up to $4150 billion in 2026, which is like more than 10 times within 30 years. I remember I read somewhere that during the time of Mughals, our GDP contribution was 24%. Then at the time of Britishers, it was down to 1%. So we started with 1% in 1947, it came up to 3%, it went down to 1.16% in mid-90s. Why so? Because we didn't catch up with the world. While world was investing heavily into manufacturing, etc., we were not export-oriented. And that's the reason our contribution to GDP of the world in percentage terms keep on coming down till 90s. And then we all know the rest of the story that we had economic liberalization, and since then we are going up only. So right now our contribution is 3.7%, which is highest since independence. GDP per capita when we talk about our expenses, there are some expenses which has to be there always. We need to buy roti, we need to buy kapda, we need to have a makan. Beyond that is discretionary spend that we can have. So if I am earning 100 rupees and I am spending 90 rupees on roti, kapda, makan, I will have only 10 rupees for discretionary spending or saving. But if this 100 rupees become 150, then my discretionary spend will increase from 10 to 60. It becomes 6 times. Assuming that I am not investing more in lifestyle, etc., but still my discretionary proportion of income will drastically increase. And that's what is happening in India, and that's the reason that we are having so many new restaurants chains. We have so many discretionary spending, like movie watching, etc., and a lot of opportunities are coming up in those sectors. Merchandise exports again, in spite of all the tariff wars, etc., our exports are still coming up. GDP per capita. So my GDP is growing, but so is my population. So is my GDP per capita increasing? Yes. Life expectancy in India at the time of independence used to be 37 only. It came to 47 in 1964. As per latest number, that's 72. Internet penetration is one of the highest in the world. Average monthly SIP, very relevant parameter for our industry, has again, so this is slightly dated, otherwise it's 30,000 crore now per month. And that's the reason that in spite of all the outflow by FIIs, we are still not seeing that much downfall of the market, because whatever money FIIs are taking out, DIs have been able to more than compensate it. This is the graph which shows the divergence of cash flows from FIIs versus DIIs. So while FIIs have been selling money, have been taking it out, FIIs have been taking out money, DIIs have been investing aggressively. So I was, from 2014 till 2024, they invested something like $50 billion net, and in last 4-5 years, they have taken out almost same amount. These are government welfare schemes. When we talked about multi-dimensional poverty, it's because of some of the government schemes that people have got access to many of the basic requirements which earlier were luxury. So new bank accounts in India, just think of any laborer from Bihar working in Mumbai. How would he manage his money? He will be living in a place where he will be sharing room with 10-15 people. And if he doesn't have access to bank account, he will be keeping his money in cash currency notes only, which is vulnerable to being stolen. Then how would he send money to his village? Through some middleman who will charge him a very high amount. Every such issues have been eliminated by UPI, by opening their bank accounts. So when we talk of technology, we think that technology is a very elitist idea. It helps rich people only. But think of a scenario of Uber car. So probably for you and me, if Uber is not there, we'll end up paying 150 rupees for 100 rupee work. But think of the Uber driver who get access to such a big market, all thanks to Uber. And this is the kind of revolution that technologies like UPI, Aadhaar, etc. has brought to Indian masses. There's one documentary on Aadhaar on Sony, which is named Aadhaar only, I think. It's an amazingly goosebump giving documentary on how Indian frugal technology can work for the world. Amazingly story. As an Indian, I felt very proud listening to it, and I will recommend everybody should watch that story once. Swachh Bharat Abhiyan. So having hygiene was a luxury for many people in India. It was such a big luxury that people just accepted it, it's their way of life. But thankfully, to Swachh Bharat Abhiyan, we have got 100% hygiene coverage in India. Certainly these numbers may be plus minus 5%, but it gives you a trend. And there was a recent World Bank report which showed that waterborne diseases in India have come down drastically because of Swachh Bharat Abhiyan. Earlier, people were excreting in the open, that was polluting the water tables in India. But because of Swachh Bharat, there is a proper channel for the flow of that excreta. And hence, waterborne diseases in India have come down drastically. Ujjwala Yojana, again access to LPGs. Jan Arogya Yojana is access to medical facilities. Number of Ayushman cards issued. Under Ayushman card, poor people can access surgeries up to 5 lakh rupees in India. And they just need to carry that Ayushman card to the hospital, and hospital will take care of everything. And by hospital, it's not government hospital. They can avail those facilities in most of the private hospitals in India. Awas Yojana, Pradhan Mantri Awas Yojana, a lot of people got houses. UPI transaction, UPI, I think being NRIs, you know better than I do what kind of convenience UPI brings to the table. 7 countries have adopted UPI. The number of UPI transactions, so if you look at the universe of electronic money transfer, electronic money transactions, by the sheer volume, UPI processes half of world's transactions. Why so? Because through UPI you can transfer even 1 rupee or 2 rupees to any seller, while for everybody else, electronic transfer means credit card or debit card. So your universe becomes much higher in UPI as compared to credit and debit card holders. Some of the reforms that I'll be showing you, GST, Make in India, etc. Gross NPA of scheduled commercial banks. NCLT was launched in somewhere in 2016 or 17, NCLT and IBC. At that point of time, NPAs of Indian banks was almost double digit. NPA means non-performing assets. Before NCLT and IBC, there was no standard definition of NPAs. What NCLT Act did, it brought uniformity to the definition of NPA, and then highest NPA accounts were sold off, auctioned in a time-bound manner by NCLTs. And the result was that from highs of 9.1%, it's down to less than 2% in less than 10 years. In earlier system, the recovery rate was around 14-15%. Under NCLT, it has come up to 40-50%. Some of the names that you can read over here, they used to dictate industries in India. They used to be monopolies in India, Videocon, Diwan Housing, Bhushan Steel, SR Steel, they all were declared defaulters and they all were auctioned off. जैसे बॉलीवुड मूवीज में दिखाते हैं कि नीलामी लग रही है, उस तरह से इनकी नीलामी हुई. And that auction also was so much rule bound that in the NCLT Act, they ensured that promoter doesn't come back through some back door. There were some attempts where promoters tried to buy back his own company through back door, but NCLT Act ensured that didn't happen. So Wealthy Nivesh is one of the recognized startups of Government of India. We were recognized because of our application of technology long back. But even otherwise, there are 230,000 startups in India. Number of unicorns. Unicorns mean number of companies with $1 billion valuations is 120 in India, and this is startups only. I'm not counting listed companies in it. Government also introduced performance-linked incentive scheme, which was import substitution scheme. And how it worked, they told producers that subject to your production targets of this much volume, you will be given 5-6% subsidy. And the result was, I'll show you in next slide. Mobile phone exports from India increased from 230 to 2600 billion rupees in financial year 26. So they become more than 10 times within 5 years. Mobile phone production in India increased from 189 to 6230 within 10 years, which is again more than 23 times. And from net importer, India became net exporter of mobile phones. One of the most illustrious manifestation of modern retail technology is iPhone. If you talk about iPhone, India's share in global shipment of Apple's iPhone has gone up to 23% last year. This year it is supposed to be 28%. So that means world में जितने भी iPhone बन रहे हैं, 4 में से 1 iPhone इंडिया में बन रहा है. Electronic exports also have seen this kind of drastic growth. I come from a typical business family, typical baniya galle wale family. And it's very typical for those people who comes from business family to service side to see ki how tax are, very unsymmetrical on both sides. A businessman can take all kinds of measures to save tax, and salaried people have to pay tax. Unka to TDS ka day aata hai. And I strongly believe that was one of the reasons that GST was opposed by business community of India staunchly. Why so? Because everything comes on paper. And that's the reason that indirect tax collection of India increased from 5.46 to 22.27, almost 4 times within 10 years. So all the red lines are pre-GST era and blue lines are post-GST era. You can see after 3 years of GST, they took a huge kind of growth. Thank you. Thanks for being such a patient audience. Now I'll hand over to Srishti to take the discussion forward. Any questions until now? So either I am doing very good job that there are no questions, or I am doing very bad job that there are no questions. But anyhow, thanks. Thanks for turning up. And I'll hand over to Srishti. Thank you.
Thank you, Mr. Ankit, for providing such a compelling perspective on India's future and setting the perfect tone for today's discussion. Moving forward, as investors, balancing risk and reward remains one of the most important aspects of wealth creation. Our next section explores how investors can navigate both Indian and global markets amidst changing economic conditions, geopolitical developments, and evolving investment opportunities. Today, to guide us through this important discussion, we are delighted to have with us Mr. Vinayak Bhatt, Investment Strategies, DSP Mutual Fund. Please welcome him on stage.
Good afternoon, everybody. Thank you for the opportunity provided. And I'm glad that NRI Nivesh, Wealthy Nivesh is doing such a great thing. So to start with, I'd just like to introduce myself here. So I'm from DSP. I have a decade of experience. And while I joined DSP, it was a pivotal point in my career because that's when, India started a space of 2 years of slow growth. So last 2 years has been very different for India. That needs to be agreed. At this point, when you see other economies have been doing substantially well in terms of AI and China +1, India has done relatively well. This last entire government has done multiple measures. RBI's monetary easing, government policies, good monsoon which we had, inflation was good, low inflation to the entire year. FTAs, number of FTAs, even Oman was one of it. However, just when things came back to normal, the credit growth looked well, auto sales were substantially well in this quarter. The most frustrating part, this West Asian crisis came in hand. And now, next 1 or 2 quarters, you will see that earning visibility isn't there. That needs to be agreed. Now, to take this discussion further, this entire bit is going to be covered in the presentation itself. I just want to give you that perspective from where I'm going to start the conversation. So before I start this entire conversation, firstly, Oman and India has a great history. So 11.2 billion in bilateral trade. 1 million Indians calling Oman their home. It's not a small number. Just few days earlier, you might have seen the news article which talks about SEPA. And the bilateral agreement and the trade is still growing. Now, the whole point where the relationship started is humans. Migrants from India to Oman has increased 4-fold in last 30 years. the share of inward remittance, this pie chart is basically all of you, has 38% of the GCC inward remittance is coming to India. It's not a small number, it's a great number. Before FTAs, before all the agreements, that was human which came into this country, and that's where the relationship started. So you need to acknowledge this. So before I deep dive into conversation, I want to just give you 2 cents about DSP itself. So DSP is a 165-year-old company. It's the oldest. And throughout this entire history, we had 2 large global associations. You might have heard DSP BlackRock. So, and there was Merrill Lynch as well. So these 2 associations which we had. And as we speak, we are one of the largest asset managers and 28 billion in AUM, of which 4 billion comes from offshore. So from institutions, pension funds, individuals across the world. So the whole point which comes is why India? And I agree to that point, why India? So this is a slide which I really like to show to an international audience why India. Because India is not one country, it is 28 markets altogether. If you see this slide, you'll notice that Uttar Pradesh has a population of Brazil. And its GDP is as equal to Qatar. Maharashtra has a population of Japan. What is even more surprising is the GDP is as equal to Singapore. So, it is continent of economies with the consumption, with the labor. You see the per capita growing. So that's why I call it as epicenter of growth. So I think this was already covered, the GDP bit was already covered, but definitely it needs an acknowledgement that the world is growing at a GDP of 3%. We are growing at 300 to 400% above that. Now it's not just GDP. GDP doesn't drive markets. Market is driven by breadth. And the breadth of the companies is there in India. So 28% of the companies have delivered greater than 20% 10-year ROE. It is second only to US. And that's a great acknowledgement to have. And if you see what shareholders get, it's ROE less cost of equity, it's a shareholder value generation. Even in that, India comes just second. And that is, again, a credible mark to have. Now, this is very important to understand that India is not 1 or 2 sectors, it's not 1 or 2 stocks. So people have deviated from the Indian markets, have gone to other markets like Korea and Taiwan. The reason is there are certain hardware and semiconductor companies which are attractive. Now the whole market, so Indian market was 5th a week back in terms of market cap, and today it's 7th. The reason is 2 or 3 companies have exponentially grown. But if you look at another angle, a population of 1.4 billion, the consumption story which we drive, how can this be possible? So for us, you need to understand that if at all the financial sector does bad, you will have a IT sector who is going to do well. If IT does bad, then there is capital goods. So a single sector cannot determine what is going to drive the economy. It needs to be multiple sectors, and that's where India's story plays in. Now, if at this moment anybody who's invested in India will have seen that the markets at last 2 years have not done well. That is agreed. But however, you need to understand that there is a history which goes around that. So this chart, if you cast your eyes on the bottommost chart, you will see that every time there has been an underperformance 20-22%, the next leg it's always been an outperformance. So at this point, we are at minus 62. As I mentioned, the leg got spread across because the Middle Eastern crisis kind of created a further diversion into it. But history has been remarkably consistent. So if history repeats, we need to understand that by how much can it be changed. Now this is a very interesting slide, and it's very important that, this is a ranking-wise chart in which you will see that first important thing to notice is India has always been 1, 2 or 3 in last 10 years in terms of return. Now what is even more interesting is if you see 2024, Korea has been on the bottom of the table. Next year, it's on top. Now 2 years before, Taiwan has been on the bottom of the table. Next year on top. So the whole point is the leadership board keeps rotating. So India has been on the bottommost of the table now. Now we need to see what inflow can be created from it. Now this is again an aspect which is important, that currency has been depreciating. I will be covering this in very detail in some time. So currency has been definitely depreciating. But when it has in the past, some measure of RBI and government in 2013 or 2000 in the COVID has kind of deviated the flow, and you'll see the chart, the rupee depreciation minimizing immediately after that. This brings me to a very important question. Everybody's been asking that AI, definitely. This is a very important question to be addressed, and I'm here to do exactly that. I'm not of an opinion that to say that AI is a bubble. I'm not of an opinion which says that AI will be staying forever. I am of an opinion we need to understand the data, we have to understand the metrics behind it, and then comment on it. So, this is the top 5 hyperscalers, the Amazons, Alphabet and Metas of the world. The capex which they have in the past 5 years, before the ChatGPT was launched, you'll see it's at 23%. And post the ChatGPT launched, it has increased to 50%. Now, such an elevated level of capex being put in something. Now, that if you cast your eyes on the right-hand chart, you'll notice that there is a metric which is called as capex as a percentage of cash flow from operations. What it essentially says is that the cash which is generated, how much you are putting in terms of capex. It was 40% earlier. Now it is 96.2% for these hyperscalers. Now, if you put your entire capex, the entire cash flows capex into something, then you don't have any margin of errors or margin of safety. Now, this looks very ugly at one point that, your debt or the CDS rates will be increasing. It's very complicated in that sense, but it's very simple if you understand that you don't have money to really think about or deviate it in something. So that is one of the things which we think that is a very problematic zone, and which has happened in the earlier history as well. Now, one aspect which I will show you is that Cisco, which was the darlings at one point, had developed in 3 phases. One was it was in a build-out phase where the capex was just initiating, and there was no disruption as such. And then there was an adoption phase where the capex started elevating, and everybody started munching on and the supply side, supply got increased. And then there was a disruption phase. And I see a similar trend at this point, where NVIDIA has already reached the first 2 stages. Now let's come to India. Where will India be in this entire AI cycle? before this AI came into picture, there was cloud. And before cloud came into picture, there was enterprise system. So India was great. India, large IT companies were great in the cloud IT system at point. So the enterprise IT system. But then there was a transition which happened. And if you see this chart, there were 3 painful years of degrowth from 2015 to 2018, which our IT companies faced. And then, as cloud started getting invented, and then we started adopting and deploying cloud itself. And you see the J curve by that. So our companies are adept to do that. Now, this is one of my favorite slides because it tells you where India has been. So we were never first one to invent. If you talk about AI, we will not be the first one to invent, but we will be the first one to scale it up. We never invented 2G, 3G or 5G, but we have 1.2 billion subscribers with the cheapest data of 11 cents per GB. We did not invent digital payments globally, but we have 20 billion monthly transactions, almost 50% of the global transactions. We never invented the original molecules in terms of pharma, but we have 20% of the global generics, and we are called as pharmacies of the world. We did not invent the vaccine, but 60% of the global supply during the pandemic was done by India itself. Now, this is a favorite part, where you'll see mission to Mars was completed in 74 million, where the movie Gravity of US was even ahead of that. So that's where, it's very interesting to understand that we are scalers. It definitely will adopt AI. It will not happen in a year or two, or a month or two, but it will be happening in one or 2 years itself. It's a few years down the line. Now, the second important question which everybody is asking, and this is also, I think, everybody might be thinking of, and what's happening to us currency? Why is the currency depreciating? Let me exactly cater to that question. So there's a metric which is called as REER. It talks about the bilateral trade and the currency on that lens. India, at this point, is at 88. It's undervalued. Currency has depreciated very sharply. Only time this has happened earlier was in 2013 and 2008. In 2013, there was a twin debt crisis, taper tantrum, as we all know. At that point, 1 year of high inflation, balance of payment, capital account deficit was, current account deficit was 4.8%. And that is not there currently. Our balance of payment is, current account deficit is well less than 1%, and inflation is even lesser than US. So if you see our inflation, last entire year has been lesser than US. Then people say that, this is not the current account deficit problem, it's a FPI problem. People are pulling out from India. Definitely, I agree to that. There are 2 reasons to it. Indian market has delivered for the investors who had invested in previous lives. They have their maturities which have come in, and they kind of pulled out their funds once they felt that they got enough returns. One is that. Part 2 is definitely the AI which people are talking about, the Korean market, the Taiwan market. People are investing into that. However, if you see the number of pullouts which has happened, we have a sufficient buffer of service exports, which is approximately 418 billions annually. Now, this is a great figure because in 2013 or 2008, we did not have that. Now, there is an FX reserve which is used to hedge currency in terms of whenever it's depreciated a lot. And currently, our RBI government is trying to do that. But that said, the percentage which has been used to do that is fairly very low. We have an FX reserve of $700 billion. And that is sufficient for any hazy day. And it's the highest at one point. And we did not have in the previous stances or instances which you can talk. Now, I have kind of catered to some of the questions which I think you might have had before you came into this conference. Let me just talk about the strategies which DSP gives you. So if at all any investors really want to invest into Indian markets, they might think about either investing from a passive route or an active route. We deliver both. If at all you want to come through a passive route, we have an MSCI feeder in the GIFT city. And if you want to have an active route, we have an active strategy as well. So towards our active strategy, how our fund manager thinks is he has to deviate put his books into two buckets. One is two-third where he will look at sufficient amount of margin of safety. He will look for value stocks and the good place to be in a cycle. There he will try to invest in his two-third part of his book. For one-third, he is okay from deviating from the margin of safety criterion. However, the growth needs to be there. So this is how the fund manager looks at. And he's very nimble and agile in his approach. So if at all he will look at an investment thesis which is violated, so he'll not invest in that stock. Rather than if at all he finds a good stock elsewhere, then he will invest in that. So this is some bit about his strategy. I don't want to get deeper into it, but there's a passive strategy as well, which we were talking about earlier. So you will see this, that the GIFT city structure has always been an advantage structure in terms of tax perspective for an inbound investor. So in terms of passive, we have done a comparison if at all it comes through a normal MSCI ETF or as vis-a-vis if it comes through a GIFT structure. You will see at any point you will see the advantage of 1.3 or 1.9% at different time intervals. So that is that, and I think the tax part is going to be covered later on in the discussion, so that is a great bit. So in terms of GIFT, I just want to point out one important thing is we do not have, in terms of jurisdiction and treaty risk, these are two important parts which needs to be looked at. You know, there are other areas to be invested in India, which can be Mauritius or Singapore, but these are based on treaties. If you come through GIFT in India, you will not have that per se. You can, there will not be a treaty disagreement, and so that is a very advantageous part of it. The jurisdiction is there, and the treaty will never go. And if at all you have any questions, I would like to address it. Thank you. Yeah. It's separated now.
I had similar ELSS funds, tax saver funds, which I had, before the new tax regime kicked in, I had those tax saver funds. Now my question is like, previously we used to have under the ATC, we have the 1.5 tax exemption and all that. Now how do I get the benefit still, or do I exit out of it without getting any tax saver benefit? How does it go with me?
So the ELSS fund, which is BlackRock, so BlackRock and DSP have separated. I'm not sure if the DSP is aligning the same fund which you're talking about. But however, I have to understand if at all it's there, and I will have to come back on it. It's in terms of investment into inbound structures, these are different areas altogether. Okay. In domestic structures are different.
So I'm talking as a resident.
Okay, in terms of domestic structure.
Yeah.
So yeah. I understand from where you're coming from. I have to kind of, I work in the international per se. So those funds which you're talking about, we do not cater to that per se. But however, I'll connect you to the right and relevant team in our company.
All right. Okay, yeah, thank you.
Hi, just you told that rupees is still undervalued.
Yes.
how you can decide that one? Can you describe this, how it is intervalued?
Definitely. So, the reason is, if you talk about inflation, so the old age books or textbooks which you see, it talks about that inflation leads to currency depreciation. However, the rupee, the inflation in the entire last 12 months has been 2.5%. That depreciation which we feel is coming through, the sensitivity and the cyclicality which is coming into picture. So the emotions which are driving the flow, and that's why the depreciation is kicking in. And that's where I feel that, and it's evident in this chart as well, that RER is a metric which is used across the industry to understand the space, and that's why I say that it's undervalued, and it's acknowledged by everybody, because it can't be so sudden.
Because assumptions is going to go up to 120.
Definitely.
So if it's undervalued, the government, RBI is interfering still. I think they have $5 billion they have put also there. So it should not be going in that way. There is a deficit, CAD is there, but it's not that extent the rupees has to fall that one.
Definitely, sir. At this moment, what has happened is the oil prices are at such level that, it becomes very difficult to, the earning visibility is not coming. And that's where the trigger and emotions which is coming in. Now, once this oil prices which are there at $120, $150, it stays at this level for 1 or 2 quarters, the global pressure might kick in, and then, the things might be tried to resolve. And it is not just India who's facing this hurdle of problem, because oil prices and petrol prices are rising across the globe. Now,
But currency has performed in all Asia or European countries the worst.
Yes.
It has fell down in a 1 year. Is more than 12% or 13%.
Yes.
Average falling from decades is 3 to 4%.
Yes.
So it's going to 12%. It means whatever money we kept in India or invested, it lost the value of around 14-12%.
Yes.
So 12% plus inflation, we are losing 16%. Whatever investment we are doing there.
That's a great question, sir. So historically, what we have seen is every time which it falls by 10-15%, the next 2-3 years it becomes a stagnant way to deal. And the acknowledgement of the global macros which has been there, it needs to be there that if this oil is not controlled, then it becomes a risk case for everybody, and then you have to put down and come and think about how to resolve this.
Now, oil has come in a town February onwards, okay? The overall market performance also, you can say US market 54% is high, Japan market is high, South Korea market is high, Europe is stable. Why India's market is not stable? It's not for today's story. It's story from 2 years.
Definitely.
I'll like to add on to what he's saying. So, I asked the same question from Mr. Nilesh Shah, who is MD and CEO of Kotak Mutual Fund. Now, all of us can all kinds of perceptions and assumptions and all kinds of views about Indian markets and global markets. Long-term depreciation of rupee is 3 to 4%.
Yes.
By long term, I mean 20 years, 25 years, etc., etc. Now, without you bringing into picture people like Ankit, Vasant, or Anand, or Aditya, Sensex returns are 14%. Long term. Sensex means कि आप केवल top 30 companies में invest कीजिए, आपको 14% INR return मिल जाएगा. उसमें से आप 4% का dollar depreciation निकाल दीजिए, 10% dollar depreciation. Now again, I won't say I am a good authority on the same because I have limited exposure, but I have worked in Dubai for 2 years, in global markets only. If you take unleveraged portfolio in equity markets, the guidance that private bankers in DIFC or Dubai gives is 8 to 10% dollar returns. Okay. So to summarize, the kind of returns that you get in dollar by investing in global markets, that can be achieved by you without bringing us into picture, by investing into Sensex ETF only. First thing. Second, now, so there is this very good book, The Art of Thinking Clearly, which talks about psychological biases. It talks about 99 biases, and it has most of those biases which we all suffer from. द मोस्ट कॉमन बायस इज कन्फर्मेशन बायस. कन्फर्मेशन बायस इज कि मुझे टाटा मोटर्स का शेयर खरीदना है तो मैं उसे खरीदने के रीजंस ढूंढूंगा. मैं उल्टा करता हूँ, मैं ना खरीदने के ढूंढता हूँ. सेकेंड इज रिसेंसी बायस. रिसेंसी बायस इज कि अभी रिसेंटली क्या हुआ है उसके बेसिस पे मैं अपना इन्वेस्टमेंट डिसाइड करूंगा. द थर्ड इज हर्ड बायस. जैसे हर्ड बायस का एक नॉन इन्वेस्टमेंट एग्जाम्पल जो सबसे अच्छा इंडिया में है वो ये है कि इंडिया में अभी बताया जा रहा है कि आपको हेल्थ का कोई भी प्रॉब्लम है आप प्रोटीन खाओ. कुछ भी प्रॉब्लम है प्रोटीन खाना है. 2022 में पूरे वर्ल्ड में बताया जा रहा था इंडिया में इन्वेस्ट करना है. 26 में बताया जा रहा है कि इंडिया में इन्वेस्ट नहीं करना है. When I asked this question to Mr. Nilesh, who is MD CEO of Kotak Mutual Fund, he said कि अंकित 20 और मैंने I framed the question कि जो मिडिल ईस्ट में NRI बैठे हैं आप उनके लिए क्या कहोगे. तो उन्होंने एक बहुत अच्छी इंसाइट दी कि अंकित 20-25 साल के डॉलर के रिटर्न इंडियन मार्केट्स के वर्ल्ड के दूसरे या तीसरे नंबर पे हैं. नाउ पीपल साइड चाइना, वी हैव ए इंडिया वर्सेस चाइना पेपर. Last 30 years, can anybody over here guess the returns of Chinese market 30 years, annualized returns? Even lower. Even lower, 1.5%.
Chinese के कम.
And it's same with all these countries. In the good old days when we used to have ease of doing business ranking, there out of 12 parameters, one parameter was saving the rights of minority shareholder. Can anybody over here guess India's rank in the same? Only 5. Only 5. We've got such great regulations in India. चाइना में जो फंड मैनेजर्स इन्वेस्ट करते हैं आप उनसे पूछिए आप पैसा कैसे निकाल पाते हो. हांगकांग से इन्वेस्ट करते हैं, कभी इधर से करते हैं, कभी उधर से करते हैं. So the idea I'm trying to make over here कि if you can invest as less as 10,000 rupees in Indian markets with all the electronic convenience, with the fact that in all probability we all will be going back to India only, with the fact that we can fight with Indian regulator, with the fact that we can fight with Indian government also, then I think it's a strong case for India. But again, everybody is free to have their views and assumptions, and I am no authority to cite on it. As far as I am concerned, I have got access to all the markets in the world. My own money is still going into India only.
The thing is that we are sitting in the Gulf. We have getting in the dollars, basically packed in the dollars.
Correct, correct.
So we are hedging the inflation first year.
Correct.
Now even the dollar fall, that also hedging. Now that the amount which has invested in India last 10-15 years, that is losing the money.
उसमें जेंटलमैन ने जो चीज बताई है हमने भी वही देखी है. इवन वी वर डिसहार्टेंड कि 12 महीने में 12% रुपए का डेप्रिसिएशन
जो
हुआ.
हम डाल रहे हैं पिछले 10 सालों से कंटिन्यूअसली, उसकी वैल्यू भी जा रही है.
That I need to check. अगर 10 साल के आपके SIP के रिटर्न डॉलर टर्म्स में अच्छे नहीं हैं, then we need to check that. But the same insight that gentleman shared, यही ट्रेंड है. एक बार बिल्कुल ऐसे जाएगा डॉलर रुपी और फिर उसके बाद 3-4 साल के लिए स्टेबल हो जाएगा. अभी आज भी while we are talking, rupee has appreciated against dollar after Indian. Now it can be good omen for our relationship. I think it's a good omen. I keep on looking for omens. Indian government today removed capital gain tax on foreign on government securities for FIIs, and the result is कि rupee has appreciated today. So the point I'm trying to make over here is कि there will be all kinds of noise in the markets, in the economy, everything. Gut feeling क्या कहती है? Gut feeling क्या ये कहती है कि India is a good growth story, long term growth story.
उसमें तो लेकिन जैसे मार्केट फॉल, जैसे मैंने अभी एक इंटरव्यू सुना था, they were selling because of the government is spending. The growth is India's growth is not on the full growth. It's a part of growth. It's a basically investment of the growth.
That's a long topic.
Long topic. So that is also comes in that one.
For the benefit of time, we can take it one on one. Mr. Rao, you had some questions, sir.
Yeah, thank you so much. I basically wanted to know investments in the gift cities. So being an NRI, if I put dollars in the gift city,
Yes.
which is repatriable,
Yes.
also NRE account which is repatriable, also the Indian mutual funds which is also again repatriable, what is the basic difference whether I should put in gift city? Because again the gift city, the fund is going to be in the Indian market only.
Yes, yes.
And Indian mutual funds also in the Indian market only. And when I redeem it in the gift city funds, again that is converted into rupees, from rupees to dollars.
Yes.
So at that time I will hit by inflation,
Yes.
inflation and devaluation. So what is the major benefit
That's
why
a great
I should
question.
invest in the gift city?
So broadly, the returns aspect which you mentioned is same. The whole point is operational hassle is reduced because your conversion is only into dollars. And then there is tax reduction at source in if you go for the direct route. So that aspect is there that, you know, the hassles are reduced. You don't have to worry about it. And in terms, Indian government is highly promoting the gift structure. So you will see that, you know, the advantages in terms of smoothness and, you know, the troubles which you take around in terms of registration is going to be beneficial.
Yeah. I think this, we'll take the last question.
Hi,
We are
first
running
of
short
all,
on time.
Hi, I'll be very quick, don't worry. First of all, thanks all of you for hosting this event, inviting all of us. It's a great setup here and insightful session by you as well as Ankit. I have two questions. See, first we talked about those giants like Amazon and all that, you know, investing into capex as high as 96% of the CFO. So, is it an aberration now, or see, what I assume is these giants would have become giant by such a capex in the earlier cycles also. So that is why they have come up to you know, this stage. So is it an aberration that they are investing 96%, or is it a history that they have done it and they have become successful? So this is one question. Another specific question about your active strategy, that DSP active feeder fund. So is it investing in, I assume it is investing in India only, right? So where is it investing, that I wanted to ask? Is it a DSP fund only, or is it, it's a DSP fund?
Yes,
only?
yes, it's a DSP fund.
Okay.
So I'll address the first question first. That, see, if you see that there has a disruption which can happen in the market, which also happened when the DeepSeek came in. You know, the supply side gets, that happens, and then there's a panic which is created. So it's good that the capex is input and everything has been done and the infrastructure is great. But then you need to understand that the prices and the cost which has been put you have to receive the ROIC, the return on investment needs to be there on that lens. So, yeah.
No, but it gets built up over a period of time, right? You invest for say 10 years and then you start reaping benefits.
Definitely. So there is also one interesting data point which says that the capex and the which has been put as equal to that capex, the ROIC has not been received, and that also the 10 years back capex which I am talking about. So because they see the opportunity coming in, they put more and more capex into it. At one point, the supply side will be more, and then someday some China factor might pull in. If you also hear about the token prices have been so rise from Nvidia that, you know, they have to put trainers rather than the tokens itself. So the context around this part of the world is as such that, you know, at some day, definitely we are here to use AI. I also use AI on my day-to-day life. The AI deployment and AI consumption is going to be there. How and when, it's for the world to see. And for your part 2 of the question, the strategy which we are talking about is a large and mid-cap strategy. And it is a 25-year-old strategy, the domestic underlying strategy. And yeah, I can, like, post the conversation, I can cater to this strategy in a better sense.
Sure, thank you so much. Thanks a lot.
Thank you so much, Vinayak, for your lovely insights. And DSP has always been a very research-oriented, and I liked your presentation very much. You have covered a lot of what I am going to cover after lunch, so my job becomes easier. Just to end with last point, sir, every past opportunity we see, it looks like a past correction. It looks like a lost opportunity. And today's correction, it looks like a worry. So that's how it is. The markets are like this.
So before moving forward, let me also take this opportunity to welcome our esteemed client, Mr. Vinod Shah, for joining us today. Thank you, sir. As India attracts increasing global markets, global capitals, NRI today have multiple avenues to participate in India's growth story. Our next session focuses on understanding these pathways and how investors can effectively access opportunities while managing global portfolios. To share his expertise, we are honored to invite Mr. Anand Vardarajan, Senior Executive Officer, ICICI Prudential AMC DIFC. Please welcome him.
Thank you.
Good afternoon, everyone. Good afternoon. I had requested Ankit and team to prepone my session a little early so that I can take a flight back to spend time with my family. But I didn't know it's going to become so difficult to just talk to you just before lunch. Right? So I have this feeling that I'm standing between you and your lunch. So this becomes very important that I make sure that the session is interesting. Thank you very much, Ankit, Aditya, and the entire team for inviting us over and making sure that we stand in front of you and we are able to talk. Thank you very much to all of you all for making some time on Friday to come and speak to us and, to sort of listen to what we have to say. Because in a country and in a situation in the world, we are unfortunately in a situation of information deluge. बराबर है? हाँ, information का shortage किसी के पास नहीं है ना? Shortage है किसी के पास? Right? So we are in a state of information deluge, and there's so much information that we don't know what to do with it. And we go into complex AI models, we run all of that, and we try and understand what's good for us. I've been in the business of managing investments and wealth management and investment management for 24 years. Does it mean that I know it all? I have a job to speak to you, not to manage money. Right? So even after being in this industry for 24 years, I have only made sure that I find the right advisor for myself and ensure that I give the job of managing money to my advisor and not keep it with myself. A lot of people keep asking us when we go to sessions like this, how do you manage market volatility? हम सबके दिमाग में ये सवाल आता है ना, market इतना volatile है, कैसे manage करना है? नहीं कर सकते, right? But मैं आपको एक चीज बताऊं, which is the biggest problem? How many of you all think market volatility is a very big problem? Put up your hands. It's good to do some exercise, right? Let's see how many of you all think market volatility is a big problem. Only 2? Oh, market volatility is not a problem. Okay, then what is the problem? Market volatility is an opportunity. So what is the problem, sir? Psychological problem. This is the most intelligent answer I've heard in 10 years of public speaking. Okay? Fantastic answer, sir. Because I have always said in the last 10 years that I've been speaking in public, managing volatility in the market is very easy. Okay, you have asset allocation, you have models, you have people, you have all of that. But how do you manage the volatility in the mind of the investor? Impossible. So very nice, sir. Many congratulations to you. You understood what you should not do. So you've become an expert at this, right? Fantastic. So thank you very much, everyone, again for being patient. And Vinayak, fantastic data points. Thank you so much for bringing that up. Makes life a little easier for me when, I don't have to talk about why India. Right? So let me talk something different to you all. Because again, we'll have Aditya talk to you about why India again a little later after lunch. So let me keep the topic a little lighter. Right? So let's come up with a couple of questions. Why is it not going back? Can you take it back to the... Technology doesn't want when you want it to work, right? Can you take it back to... Okay, I know what's my first question, so let's start with that. I don't have to wait for that slide. Okay, now, my only request is everybody should be participative. I don't want this session to be boring,
right? Because a session like this is only interesting when there's participation. Yes or no? वरना आप खड़े रह के बात करते रहोगे, कोई नहीं सुन रहा है या कोई respond नहीं कर रहा, तो मजा नहीं आता है कि नहीं? So now that's my first question, sir. How many of you all are currently investing in India? I'm just trying to see if somebody is not. Right? अभी इतने सवाल पूछते ना इंडिया में क्यों करना है, तो मैं सोचा लोगों का नजरिया बदल रहा है कि इंडिया में पैसा नहीं भेजना है. देखो रियलिटी ये है कि लाइक इट और डोंट लाइक इट पैसा इंडिया ही भेजना है. बराबर है कि नहीं? वी कैन कीप सैटिस्फाइंग आवरसेल्फ बाय आस्किंग क्वेश्चंस के क्यों करना है, कैसे करना है, बट रियलिटी है हमको पैसा इंडिया ही भेजना है. राइट? सो यस, सो द आंसर इज ओके, वी डोंट वांट टू गो सो फास्ट. हाँ, ओके. All right. Don't take me to the end of the presentation already. Thank you, and sorry to sort of get you to do this. Okay, let's go back to our questions. Okay, so this was my first question. Now let's go to the second question. What percentage of your portfolio is allocated to India? Sir, let me ask you. 100. Fantastic, sir. 100. 100. 100. Who's 50? Wow. Okay, one different answer. Yes. 100. Let me ask somebody young. 90. Okay, madam. 100% India. So nobody is allocating money anywhere outside? 2 people are raising hands. 3 people are raising hands. 4. Okay, so now we see. Okay, अच्छा है ना, अभी थोड़ा exercise हो जाएगा. Left, right hand थोड़ा उठाते हैं. Right? Next question is, how many of you all believe in what is written here? How many of you all believe this? We should put our hands on our chest and be proud of it, right? We will be the third largest. We will be. That is for sure. So then why are we still asking these questions? But it's important to keep asking, no? All is well बोलना पड़ेगा ना अपने आप को. Right? वरना stress होते रहेगा. पैसा portfolio नीचे जा रहा है, Wealth Nivesh app में देखोगे negative आ रहा है, तो you have to keep convincing yourself, right? Now, what is the biggest reasons? For example, we still see there are people who are talking about 50%, 90%, 100%. Okay, we have very sensible people in this room. You must clap for yourself first. Can we clap for ourselves? Okay, currency का डर हो, किसी भी चीज का डर हो, पैसा तो हम इंडिया ही भेज रहे हैं. Okay, which is different in Oman. I live in Dubai. Okay, when I live in Dubai, when I go and address audience like this, they'll say, sir, हम तो 10-15% पैसा इंडिया में डालते हैं, बाकी तो we are all catered by the private bankers. Okay, external asset managers, private bankers, उनको तो fancy product बेचना है. Okay, so when I ask them, आप 100% पैसा इंडिया में क्यों नहीं डाल रहे हो? 4-5 चीज वो लोग बोलते हैं. एक तो information बहुत ज्यादा मिल रहा है, that results in lack of information. So we are confused. So we live in Oman, we live in Dubai, we live in GCC. So how do we know what part of India is working how? Sir, thank you very much. Nice to see you, Rajesh sir. Thank you so much for coming. Second is complexity of investment structures, right? हमको कोई बोलता है यूसिट्स में करना चाहिए, हमको कोई बोलता है गिफ्ट सिटी करना चाहिए, कोई बोलता है एनआरआई अकाउंट से ही करो, ये सब टाइम पास मत करना. So complexity of investment structures is there. टैक्स डिलेमा, सबको बड़ा परेशानी है ना टैक्स से, है कि नहीं? If somebody says no, I'll say you're lying, right? But there's somebody who's going to talk about tax later in the afternoon. I don't want to take away his job, right? So then we have a currency risk. Sir and Vinayak and Ankit had 10 minutes debate on currency. Okay, but still, yeah, currency is a fear which everybody has. हम लोग रियाल और डॉलर में कमाते पैसा, इंडिया में रुपी में भेजेंगे, रुपी का क्या हालत होने वाला है? We have to be worried about it, right? Difficulty in finding suitable products, ये एक बड़ा problem है, whether we like it or not, right? So these are the set of problems that we have to understand. Next is, today, let me ask you, sir, whom do I pick? Sir, let me pick you. Can you put up your hand? Okay. हाँ, डरना मत, आपको कुछ डिफिकल्ट सवाल नहीं पूछ रहा हूं. आपके पास $1 मिलियन है अभी, ठीक है? आपको कल $1 मिलियन इन्वेस्ट करना है. डू यू नो हाउ, वेयर एंड यू नो ऑन व्हाट टू पुट द मनी एट? नो, राइट? आई विल टेल यू, वी मे नॉट लाइक इट. 9 out of 10 people will not know it. करना तो है, क्या करूं, कैसे करूं, किधर करूं, क्यों करूं तो थोड़ा दिल में जवाब मालूम है, पैसा कमाना है ना, रिटर्न बनाना है, right? But the question is, we still don't know how to do it. That is why you need people like Wealthy Nivesh. That is why you need fund houses like us. That is why you need RMs who are going to sit with you and understand your objective to help you do what you have to do, right? Next, how many of you all, now we are all NRIs living here, right? Okay, now I can see smile on people's faces finally, right? I was sitting in the corner and trying to observe you all, but I was seeing nobody was smiling. Now some people are smiling, right? So how many of you all have a property in India, okay, but have less than 10% of your financial assets in India? Huh? More than that. So very good. This is a different audience. So this was a presentation that I used in Dubai also, और इसमें एकदम अतरंगी जवाब आता था मेरे को. Right? Sir, हमको तो structured products अच्छा लगता है, Singapore, Switzerland. मैं बोला भाई ये सब. That is why my colleague Akash tells me, sir, Bahrain और Oman आओगे ना, बहुत simple, सादे and सुलझे हुए लोग हैं. So that is what Akash, good observation, huh? So the reality is, at the end of all of this, we know that we are sending money to India. We know that India is a growth story. Okay, Vinayak spoke about 30 minutes about that. We all agree to it. Okay, now there are many ways to invest in India. Okay, which is the most efficient way of doing it? That is something which is very important to understand. हमको यहाँ से अपने घर पहुँचना है, right? सबसे सही रास्ता कौन सा है वो अपने को पता करना है. पहुँचना तो घर ही है. Yes, madam, have I confused you enough? No? Okay, great. Right? So now next is, today's presentation is not only about talking about why India. ये तो हमको थोड़ा बहुत मालूम ही है और we will keep cementing our thoughts. But the importance of this session, what I'm going to talk about is, which is the best route, which is the most efficient route to invest in India. Right? That is what we're going to try and see over the next 10 minutes or so. Right? I was given an hour. I don't want to take so much. Okay? I want to try and finish as quickly as I can. Okay, I think why invest in India? We've spoken enough about all these things. So let's talk about a little on who we are. Okay, as ICICI Prudential, we are a $140 billion asset management company. We are the largest mutual fund in India as we speak in terms of non-government promoted mutual fund. We have two large shareholders, ICICI Bank and Prudential of UK. So we have one of the most tried and tested products. Our business is managed by, our fund management business is managed by Naren, who's one of the most respected fund managers in the country. And one of the things that Nimesh, our MD, Mr. Nimesh Shah, keeps telling us always is that we shouldn't be called ICICI Prudential Asset Management Company. What should we be called? ICICI Prudential Risk Management Company. पैसा तो बनना ही है मार्केट में. Okay, over a period of time, long term का vision रखेंगे तो पैसे बनेगा ही. But what is important is how do you protect risk? How do you reduce your risk so that your upside is captured properly, right? So that is where we come from as ICICI Asset Management Company. So number of schemes, we have about 34 to 40 plus equity schemes that we run. We manage one of the largest debt fund offerings in the country. Everybody talks about equity. Nobody talks about debt funds. Okay, debt funds is again a very, very interesting opportunity where people should look at investing. I suggest you speak to your Wealthy Nivesh team to guide you across the debt funds as well. We also have overseas fund of fund opportunities to invest. We have hybrid funds, ETFs, and customized and managed accounts in AIF and PMS as well. So now is let's talk about this. Why do we as ICICI Prudential find ourselves as good partners, and why did Ankit and Aditya invite us today here is because we are a people-oriented firm. Okay, we have the largest team of investment managers that are there in the there as a part of the organization. Product offering, there's a product to cater to everybody's needs sitting in this room. Third is in terms of we are being more process-oriented and not individual-oriented decision-making, right? So the process, people, and the end game is a combination of all of these aspects. Now, let's talk about the various routes to come into India. Okay? Is everybody able to read this slide, or is it a little small and difficult to read? Pad pa rahe ho sab log? It's small? Okay, let me read it for you. I thought, kuch to kam main bhi karu na. Right? So the first thing that I've written there is Mauritius. Okay, Mauritius has been a very favored route for a very, very long time. Tax haven hai, opportunity acha hai, structures are there. There are a lot of competitive structures which are available using which people can invest in India. Mauritius is one of the oldest routes which has been there, but there are a lot of questions in terms of how is Mauritius being treated as in the FATF guidelines, in the grey list or white list of global considerations, etc. So Mauritius is there, but it is efficient, but it is there. Second is Singapore route. Singapore is another route which is available for investments, right? Third is Luxembourg, Ireland, and Cayman. They are the one who came up with a you don't have to have an asset management company and investment team and all sitting there. You can rent a structure from somebody and they can route money through feeders to India. That's a structure which is now being used across the world, including the GCC countries. Fourth is GCC-based structures. For all of you all sitting in this room, it's very important that we mention to you that, the Wealthy Nivesh team or us, we will bring to you very interesting offerings of products which are listed in the local market. Okay? Listed in Oman, listed in GCC, listed in UAE, Qatar, Bahrain, Kuwait, wherever your friends and family are living. But these are funds which are dollar denominated and going into India. And the biggest advantage is that the tax regime and all of this becomes much more favorable, which I think the tax expert will speak about in the second part of the session. So as ICICI Prudential, like DSP, we have also spent a lot of money, time and infrastructure in building our Gift City ecosystem. Right? So now what's the advantage of the Gift City ecosystem? First is, let's understand what are the available routes. So the available routes, conventional routes that were available is FPI. Okay? कोई company है, okay, जिसके पास 10 million, 15 million, 25 million, 100 million डालना है, वो RBI के पास जाएगा, SEBI के पास जाएगा, they will say, give me an FPI license, foreign portfolio investor का license. For you and me, this is not viable. Right? बड़ा पैसा चाहिए, बड़ा टीम चाहिए मैनेज करने के लिए. Second is FDI. FDI के अलग challenge है, again not for you and me. Third, NRIs and OCIs. Through NRI, NRO accounts you can invest. That is something which is a fantastic option, which is something that you've been doing for many years already. Right? Last is through AIFs, alternative investment funds. You can also invest through your NRI, NRO account, and it is directly accessible in the region as well. Now, we also have a new investment route, which is our ICICI Prudential Gift City jurisdiction that we have. Obviously, there are a lot of things that you already know about Gift City, but the advantage is that it is giving you a dollar-denominated offshore, I wouldn't say no tax implication, but a less tax worry-oriented jurisdiction where you can get money and the investment opportunities that are there in India. Let's try and explain in layman's term, how does this work? Okay, अभी इसके ऊपर बहुत सारा presentations है, but let me explain to you in a very simple term. एक GCC structure है, okay, UAE, Oman, Bahrain, Qatar, कहीं पे भी हो एक GCC structure है, एक gift city structure है, okay, उसमें होता क्या है? The fund manager says that they are launching, let's say, ICICI Prudential Gift City Fund, okay, it can be in Gift City. It can be in Dubai, it can be in Oman, it can be anybody else through any other partner also. So what this fund does, this fund is a feeder fund. क्या कर रहा है? वो पैसा collect कर रहा है. Okay, आप सब क्या कर रहे हो? वो dollar denominated currency में आप ये fund में पैसा invest कर रहे हो. बराबर है? So what this fund is doing is this fund goes and registers an FPI. Foreign portfolio investor, जो काम आपको करना पड़ेगा if you want to go through the dollar route, that is what this vehicle is doing for you. The vehicle goes and registers for an FPI with SEBI and RBI, and they get an FPI, and all the money that is collected here goes into a mutual fund scheme in India. Right? All of us should know that mutual fund investments are held in the form of a trust. Right? उसमें except for long term and short term capital gain tax आपको बाकी कोई charges उसमें लगता नहीं है when you are investing in Indian rupee. But आप dollar structure से जब आप invest करते हो, because the dollar structure is buying units of a mutual fund scheme in India, it becomes a tax pass-through status. Okay, so आप जो dollar denominated structure, GCC structure या Gift City structure से जब आप units Indian mutual fund का buy कर रहे हो, the advantage is that वो NRI, NRO account से जो आप INR में invest कर रहे हो, उसमें जो 10-12% आपका taxation लग रहा है, that you are saving on a international structure. Right? So what this does for you, A, taxation बच रहा है, second, tax filing का काम बच रहा है. Taxation बचने में क्या है कि you can do the TRC route also, but TRC route में if you there are certain limitations in terms of what cost you pay for the TRC certificate and how much returns are getting generated. Is it viable to pay the TRC charges, whatever? So from that standpoint, an overseas structure, when it's a gift city structure or a UAE structure or Luxembourg or a Cayman or a Mauritius structure, the advantage is that these structures eliminate those manual interventions and eliminate those tax elements or tax incidences that occur on your portfolio. Right? So that is the advantage of using a global structure. Okay. Again, the benefits of using these routes. Okay. Obviously, there is access to India investment opportunity to NRIs in a global currency. Second, competitive operational regime due to international jurisdictions. Third is limited tax liability. That is why I said no tax, limited tax liability. Fourth is global currency. We already mentioned this. You don't need to have a PAN card. Without a PAN card, you can still invest. No ITR filing in India makes life easy. Okay, NRIs, OCIs can collectively own about 100% of the fund structures. Right, so these are the advantages. In terms of our gift city presence, we established our branch in 2024. We've come up, we are registered to offer retail and institutional funds there. Okay, we are also catering to international investors, and we have an office in DIFC in Dubai. So our team from Dubai, we keep coming here and we cater to the entire GCC and Africa territory. We have a team of about 16 people based in Dubai, and we cater to the entire GCC and Africa territory. So a team from our side does keep visiting the region often. So we are here to support Ankit and Aditya and the entire team to support Wealthy Nivesh, cater to managing expectations and money for investors like yourself. So we are there. Yeah, I think that's what I precisely wanted to talk about. Broadly to say that, yes, there are multiple structures. There are easy ways to go and invest money in India in the most efficient way. You should find that the dollar structures which are available are efficient in terms of managing money, getting access to the India investment opportunities, and still generating the most efficient return on investment, right? Thank you so much, and I'm happy to take any questions you all have. Yes, sir. Absolutely.
Even if you are investing in Gift City, for example, I invest $100,000, it will get converted into Indian rupees on that particular date. And when I want to withdraw, obviously I'll get US dollar, but the currency exposure will definitely be there.
Fantastic. I'll give you an interesting data point, sir. Rupee to dollar denomination हमारे control में है? नहीं है. Okay. The government can try to control it in some form or fashion, but let's look at past data. Last 35 years में the rupee has devaluated vis-a-vis the dollar at around 3%. Okay. BSE 500, which is the broad market index of India, has delivered a 11.2% dollar return. Okay. 35 साल का मैं year on year return बता रहा हूँ, CAGR बता रहा हूँ. BSE 500 has generated 11.1% CAGR. We as ICICI Prudential or any asset manager in the country, okay, who's offering dollar denominated structures would have added a 1.5-2% alpha to what a BSE 500 would have offered. Okay, so we would have delivered around 12.5 to 13% in dollar. Okay, last 20 साल में अगर 12.5-13% डॉलर में रिटर्न मिल रहा है, अपन को क्यों ज्यादा सोचने का सर? Are we expecting that we will do in dollar 20% return? Not happening. Okay, we are going to the best economy in the country, still consistently delivering 12.5-13% return. Dollar will keep playing what it has to play. Sometimes it can fall more, sometimes it will fall less, sometimes it will taper, sometimes it will stay flat. But in the last 35 years, if the market has delivered 12.5-13%, the funds have delivered those kind of return, I think it is sustainable over a long term. So I don't think that's a big worry.
And what will happen if my residential status change to resident from NRI?
Good question. So I think what we will need to do is, obviously that money cannot be held, because when you go back to India as a resident Indian, so when the money is coming from, when the money is going back to India, it accounts for round tripping. So you will have to redeem that money and then take it back to India in the resident. Before you go back to India, before your tax status changes, you redeem the money in the international account and then take it back to India. I'm sure over a period of time. See, Gift City ecosystem is evolving, sir. Okay, but I'll tell you, there is still some distance that they can cover in terms of the regulations, etc. So that is why we are also looking at multiple other jurisdictions. Like we have our operations in Mauritius, we have Luxembourg, we have GCC-based structures, etc. And Gift City is also there. But when we sit across the table with people like you, depending upon the tenure of your investment, depending upon what is your future outlook, so we can sit with you and guide you on what's the best way to do it. One size fits all to nahi hoga, so we'll work on that with you. Yeah. Yeah. So, sir, abhi India mein we run a global fund, jo INR mein hai, and the objective of setting up a Gift City entity is obviously to do India to overseas. We have one of our shareholders, which is Prudential. Prudential, through eSpring Investment Managers, is one of Asia's largest asset management company, right? So we have global asset management capability. I think in due course of time, we will bring up global-oriented products as well. We have a US blue chip fund as well. So, hey, kafi hai products. We will bring those to the region. Yeah.
Yeah.
Who's that? Sorry.
I want to know, yeah.
Can you put up your hand? Sorry. Yeah, thank you, sir. Yeah.
What is your forecast for Indian economy in next 6 months, based on the fact that it is probably the fastest declining currency in the world last 6 months. Even the Pakistan currency, Pakistan rupee is growing better than Indian rupee. In the last 1 year, if you take, it is strengthening. So I'm not sure if we invest in dollars, and that is converted to rupee today, and after 1 year, although the mutual funds are growing, if I get a 10% mutual funds, again it is after 1 year, the rupee devaluation is happening by 10%, I'm going to get the same dollars. So how do you forecast next 6 months?
Good question, sir. Sir, if, like what Mr. Sankaran Naren, our ED and CIO, who's been fund manager for last 30 years, what he says and what I will say is we cannot predict. Okay? If I say that I can predict, that is the biggest lie. Point number one. Point number two, if our vision is 1 year, 2 years, not today, for the next 30 years also don't invest in equity mutual funds. Okay? If your vision is less than 3 to 5 years. Because equity markets, how they will play out, okay, is something which is not in our control. If you're talking about equity investments, you should talk about 4-year, 5-year, 6-year kind of investments. If you ask me what will happen over the next 6 months, we are in a zone of very, very moderate returns. We are not going to get exciting returns. Okay? Moderate returns aayega. We have to make sure that we control the risk. So that is where there are certain strategies that we offer to our investors. We will talk to you because that's something that we have to recommend to you on a one-on-one basis and not like a one-size-fits-all approach. But if you want to look at 6 months, 1 year, you're better off looking at bringing a good component of debt mutual funds into your portfolio as well. Balance it with good quality or large cap kind of equity strategies. And don't worry about the rupee to dollar depreciation. Keep a long-term vision, it will play out. I'll tell you the other thing, sir, okay? Because I'll tell you, a lot of investors ask me, sir, in your dollar fund, why don't you hedge the currency? Rupee to dollar hedge kar lo na. अगर हम लास्ट 15 साल का एनालिसिस करेंगे जो हेजिंग कॉस्ट निकालेंगे ना इट ईट्स इनटू द रिटर्न मोर सो वी आर बेटर ऑफ प्लेइंग विद द रूपी टू डॉलर डिनोमिनेशन सो वी आर नॉट वरीड अबाउट दैट बट यस लॉन्ग स्टोरी शॉर्ट 6 महीना देखना है लुक एट डेट म्यूचुअल फंड्स लॉन्ग टर्म सोचो इक्विटी म्यूचुअल फंड्स विल मेक लॉट ऑफ मनी फॉर यू डोंट वरी अबाउट द करेंसी दैट्स माय व्यू
द प्रेजेंट इकोनॉमी और द इकोनॉमिक्स is not giving that confidence. Why? Because you are importing oil about $40 billion and you are exporting around $800 billion. And remaining all other than oil, I think everything can be manufactured. But unfortunately, you are still importing around $1 trillion, billion. So with this economy background, how do you see that value, rupee value will increase?
Sir, I think the government is doing a lot of initiatives in terms of make in India and make for the world. Okay. Is it going to change in 6 months to a year? The answer is no. We need to have a long-term vision. have we seen, I think Vinayak's slide spoke about, 1 in every 4 phones is going to be made in India, right? We're talking about EV vehicles getting pioneered, chips getting pioneered, a lot of things are happening in India. The answer is, I am a long-term investor. I look at markets and investments over a 4 to 5 year period, and whether it is today, whether it is tomorrow, whether it was 5 years later or 5 years before. If I have a 5-year or a 4-year vision, I think India will do very well. Okay, and in the last 35 years, if we've seen 13% dollar return, I don't see a reason why we should not see it in the next 5 years.
So India will do very well without manufacturing hubs?
The answer is no. We will have to build manufacturing capabilities. Okay, we have to build it. But is it going to contribute into your return in the next 6 months to a year? The answer is no.
How can you increase manufacturing facilities when you are importing $1 trillion, billion
so
every year?
So there are certain, okay, I'm not an expert on oil or these aspects, but what I believe, sir, is there are still certain aspects or certain businesses, certain manufacturing capability which is there in India, okay, and there is going to be an arbitrage of oil or arbitrage of precious metals or arbitrage of currency which is going to play out. But if I have a 5-year vision, I'm sure I'm going to make money. And
biggest importer of the world is China only. They import commodities from all over the world and they process it and they sell it. Now coming to the oil part, let me share some numbers. In 2014, contribution of solar to power generation in India was 1%. Now it's 24%. If you include all the other renewable energies also, it's 54%. 43% is contribution of coal to power generation. So that means 97% of the power generation in India doesn't have direct dependence on oil. 2-3% only has dependence on oil. Certainly mobility is a big part, but having said that, so in our last session, Ashish Sumaya made it a point that when oil goes up, Middle East countries benefit and India ko nuksan hota hai, correct? So it depends on how stacks are placed in your scheme of things, and I believe, I don't have that number, I think DSP came out with a very interesting number, Edelweiss came out with a very interesting number, I'll share it with you later on. Indian economy's dependence on oil has come down drastically. Oil is one of the components that we import gold also, but I think the way things are turning out, we can have a very detailed discussion on the same, but for sure oil contribution to India's woes is not as much big now as it used to be 30 years, 40 years back.
Excuse me. Oil import, to my understanding, is less than 5% of the total import.
One question from my side.
Yes.
I just want to, if a person invests directly in your ICICI Prudential from Indian rupees,
right,
for 10 years,
right,
one interest to the gift, which will give them more return?
If you see net of tax,
yeah,
okay, net of tax, I think the dollar structures will do better in terms of
how much around?
I think it will add about 1.2%.
Because LTG they say 12%, but the difference is that we, of course, you will be rotating it, all these things. Still, it will be how much? Like this one now is giving around.
Sir, मेरे हिसाब से, if we have to come down to brass tacks numbers, 1.2 to 1.3% का आपको arbitrage रहेगा.
Benefit रहेगा gift में.
Benefit रहेगा. Yeah.
Okay. Okay, this is the 2% around we'll be getting the gift to the this will be benefits.
Yeah, international structures से आपको 1.2 to 1.3% का arbitrage मिलेगा. More, I think the tax team will talk to you about it.
अंकित जी, मेरा उस समय एक ही चीज पूछने का था कि डर ये नहीं था कि रुपया गिर रहा है, डर ये है कि हम उसको hedge कैसे करें. Purpose was thinking in my mind, the rupees which is falling down, we know we cannot change it. How can we hedge? Is that you have some idea about it?
नहीं, forward cost, hedging के आप forward cost देखोगे ना, it is not credible to do that. Forward cost का जो impact return पे आता है, वो return खा जाता है.
वो तो currency forward में, अगर gold में जाएं तो?
Sir, gold is a very good proxy for dollar.
It dollar for that one, but it cannot hedge for long term in the rupees also.
So I think
it has to hedge your portfolio. It has to hedge your portfolio.
How much we can add now? Suppose I don't have only 2%, 4%.
Sir, gold is euphoric right now.
Euphoric.
Gold is in a stage of euphoria. Okay, and मतलब एकदम अलग ही level में निकल पड़ा है वो. Okay, so silver भी निकल पड़ा है, gold भी निकल पड़ा है. So my point is again, we see, to me, if I have to tell you कितना percentage आपके gold में होना चाहिए, standing here I cannot tell you unless I look at your portfolio. So I think this is a more intuitive conversation which they will have with you. That's a very interesting question, sir. I mean, I was just waiting for this question to come up, when you're in GCC and why real estate question is not coming up. So I'll tell you, sir, real estate from a personal consumption standpoint, definitely is a good hedge. Okay, but would you, if you have $3 million, will you go and buy 3 different flats? The answer is no. That will be a burden. And also because मैं क्या बोलता हूँ, एक practical चीज बताता हूँ, sir. हम पैसे save क्यों करते हैं? To save for the rainy days, right? कल का दिन आपने $1 million जाके एक फ्लैट में डाल दिया, आपको $200,000 का पैसा जरूरत पड़ा, आप किचन बेचोगे कि वॉशरूम बेचोगे? Right? So from a consumption standpoint, real estate is a good hedge in the portfolio. कितना होना चाहिए, क्या होना चाहिए, वो we'll have to do that one-to-one, sir.
And sir, to answer your question, ki how much gold or silver should be there, as he rightly pointed out, it's a very one-to-one kind of. It can't be a one-size-fit-all. But what we have done in our multi-asset PMS, that we have taken exposures during down cycles, etc., and it has worked really well for us. So that Aditya will discuss during his multi-asset presentation.
We have in real estate AIFs. As ICICI Prudential, we run one of the most successful real estate AIFs in the residential real estate space as well as the office real estate space. I think Wealthy Nivesh is doing a lot of work with 1 crore, yeah. Madam, again, REIT InvITs, again, that's a regulation which is still evolving in a big way. Okay, but the advantage of AIFs is the 1 crore, you're not giving it in one go. Okay, there's a drawdown mechanism which is there.
And also with accredited certificates, so there is one accredited certificate which our team can help you to avail. You can go with even lower ticket size in OYO. So OYO is a very good product by ICICI Prudential where they invest in commercial properties only.
So OYO, we like to call it office yield optimizer. It has got nothing to do with OYO rooms, but it's called office yield optimizer.
So it's a very good bet for if you want to take investment into real estate. More so it's commercial property oriented. So otherwise it's 1 crore, but with accredited investor, I think it can go lower also. I need to check on the amount. Ma'am, REITs, as he rightly pointed out, REITs is still evolving. Even its taxation is not clear.
I mean, madam, after being in this business for 24 years, I have zero allocation to REITs. Yeah. No. See, AIFs that's taking exposure to physical real estate as an asset is definitely a good idea. We do that. We do that a lot.
So, ma'am, Anand was trying to relay a very subtle underlying point. मैं आपको उसे दूसरे तरीके से समझाने की कोशिश करता हूँ. मेरा जो ड्राइवर है ना, उसका म्यूचुअल फंड्स में इन्वेस्टमेंट है, ड्राइवर का. और आदित्य ने तो अपनी मेड का भी करवा दिया था SIP शुरू. प्रॉब्लम क्या आती है कि हम लोग कहते हैं कुछ नया दिखाओ यार. हाँ, म्यूचुअल फंड्स में तो ना हमारा ड्राइवर भी इन्वेस्ट करता है. What he was trying to convey subtly, indirectly, that Indian mutual funds provide a very good opportunity to invest in a very convenient manner. कितनी कंट्रीज हैं जहां पे आप 100 रुपए इज लाइक $2, 100 रुपए से आप इन्वेस्ट कर सकते हैं. You have all kinds of facilities. So I know I was a private banker in Dubai. डॉक्यूमेंटेशन में ऐसा हाल हो जाता था कि कई बार क्लाइंट ना साइन करते करते कहता था छोड़ो यार रहने दो, इतना डॉक्यूमेंटेशन मुझे नहीं करना. एंड इन इंडिया यू कैन डू इट एट ए क्लिक ऑफ ए बटन. हम ना मतलब वी हैव दिस टेंडेंसी, एवरीबडी हैज दिस टेंडेंसी ऑफ डिस्काउंटिंग व्हाट वी हैव. सो द काइंड ऑफ कन्वीनियंस दैट इंडियन मार्केट्स प्रोवाइड इज फिनोमिनली हाई. जब हमारा PMS का लाइसेंस का वी वर हैविंग दिस प्रोसेस एंड वी मेट सेबी इंस्पेक्टर एंड ऑल, आई कॉन्ग्रेचुलेटिंग हिम कि सर आप लोगों की वजह से एक गांव में बैठा आदमी भी 500 रुपए का इन्वेस्टमेंट कर सकता है फाइनेंशियल प्रोडक्ट्स में. कितनी कंट्रीज में कन्वीनियंस है. आप अमेरिका वगैरह में जाइए, वहां पे लोगों को एक्सेस ही नहीं है उस तरह की. बट आनंद, I think you were holding them back from the lunch.
Yeah, so that's what I was just going to say.
But I am sure they enjoyed the session and they found it worth it.
Thank you so much. I appreciate
Any other questions we have?
No, I think I'm around. I don't want to hold back people who are hungry. I'm around till about 4 o'clock. So please feel free to stop me wherever you see me and talk to me if you have to.
Two small points to add. First, we are staying here till 12th in IBIS in Al Khubair. So we certainly can have follow-up meetings. Our team will be reaching out to you for setting them up. Second, we have got a small packet for all the attendees. Anyhow, we have more sessions, but I just thought of mentioning these 2 points in case some of you are already planning to be out.
So we'll be going for lunch, and after lunch we have 3 more sessions on taxation, on multi-asset strategy, and we'll be having 1 session on succession planning as well. So yeah, we'll reconvene here at about 2:15. Thank you.
Thank you.
Thank you. Thank you very much, everyone, for being patient. Thanks.
3:15.
CEO of Wealthy Nivesh. And to moderate the session, I would like to invite Mr. Aditya Gupta, Chief Investment Officer of Wealthy Nivesh. Please welcome all of them.
So I would request everyone who is outside, they can just come and settle in. And why we have tried to keep session on taxation after lunch, because it's one of the most interesting topic and everyone wants to hear about it. So we thought that after lunch that would be the best session. And today I have with me Mr. Shubham Patel. He is the founder of CSPS Associates. He has been working with our team extensively over the last 2 years on NRI taxation. And our idea has been to always help clients on a holistic basis. So I'll be moderating this session. And thank you, everyone. Yeah, we can just settle in quickly.
Hello. Hello.
Check.
Thank you, Shubham Bhai and Ankit Bhai, for having this session. And so I'll play a moderator role here.
Great.
And my first question is to my co-founder. Is Wealthy Nivesh is an investment firm, right? We help people manage their investments. How did Wealthy Nivesh started working on taxation and why?
So when I was a wealth manager when I was working as a wealth manager, I saw one of the most frequent friction point is getting data for the CA. In fact, we were discussing last night, me and Shubham also met through one of our clients only. And the discussion between banker and CA is mostly friction, lots of friction.
True.
So the idea was to reduce that friction, and also the idea was to have a holistic approach for managing the money. Now, when it comes to taxation, every penny saved is every penny earned. So if you can save any amount on taxation, then you benefit out of it. And so to answer your question, first was we wanted to have a holistic money management kind of service where we can help you manage your money beyond investment only, first thing. Now, how does mutual fund taxation for Middle East clients come into picture? I read an article which said that Dubai-based clients can save tax on mutual funds in India. And even after working for 12 years across India and UAE, that was a news for me. So I worked upon it. We read about DTAA, etc., and then we realized that we are not CAs, so better outsource it to CAs. So we outsourced it to Shubham. And typical to any process which is in the initial days, it was very kiddish approach on our part to tell Shubham to work on 90 countries. And then we realized that if you look at 11th country basis NRI population, that is 3 lakh only. So we focused on 10 countries, out of which 6 are in Gulf, and then US, UK, Canada, Australia. And that was the first time when Shubham came out with UAE that yes, it can be done. Then we worked for other GCC countries also, and Shubham said that yeah, under DTAA this thing can be done. But we were still very apprehensive because it was about credibility, and in our industry credibility matters a lot. So what we did, we reached out to mutual fund houses, and we took a call that we should take this clarification from SBI mutual fund, because SBI is not only the biggest capital market player in India, but they are also government backed. So whatever they say will have heavy weightage. So we reached out to their team. They confirmed to us that yes, provided you can provide us this set of documents, we won't deduct TDS. That was in a way second eureka moment. First was when Shubham said that this can be done, and when SBI mutual fund said that yes, it can be done basis production of these documents. Because in India, everybody is supposed to deduct TDS wherever it is applicable. So when a very leading mutual fund house said that it's not required to deduct TDS in such cases, provided there is this documentation, we felt that this is doable. Then for the first time in March 24, was the first time when we could get it done for a Dubai-based client. And then we started rolling it out. As of now, out of 6 GCC countries, except for Bahrain, we have done it for all 5 countries, and we have saved ample amount of money for our clients.
Yeah, thank you so much. Now my next question to Shubham Bhai. Shubham Bhai, can you explain what is double tax avoidance agreement? And what all assets are covered under double tax treaty between India and Oman?
Yes, great question, Aditya bhai. See, DTAA or double taxation avoidance agreement is a bilateral agreement between 2 countries, right? Whereby the main purpose or core purpose for DTAA is to, whereby same income is not taxed doubly. First, where that particular income is earned or where that particular assessee is resident of, right? So in order to go away this particular genuine hardship on all the taxpayers, this DTAA came into picture. And in that particular DTAA, all types of income between all those countries are mentioned article-wise, be it salary, director sitting fees, remuneration, business income, technical services, royalties, shipping income, and most importantly, capital gains, for which we are sitting over here, right? And in case of capital gain, there is a particular article. If we talk about Oman, there is Article 15 between Oman and India, which just specifically talks about capital gains only. And multiple assets are covered over there, be it immovable property, shares, stocks, or other assets, be it shipping industry as well. But in case of residual clause, there is one more residual clause on which we are focused upon. In case of residual clause, it is mentioned over there that whatever assets which are listed above, any asset other than those which are listed above should be taxed at the country where that particular assessee or taxpayer is resident of, right? So if we talk from the perspective of any person who is staying in Gulf or any those countries where any NRI can take benefit of, so in that case, wherever there is no personal income tax or wherever there is no capital gains tax, so one can claim the DTAA benefit on that asset class as well.
Right. And Shubham Bhai, so next question is basically what is the implication, tax implication, particularly for an Oman-based resident who is investing in mutual funds in India?
See, if they directly invest in, if they go by the normal route, if they go by the normal route, the tax implication for NRI will be similar to any resident only. If the asset, if the period of holding of asset is more than 1 year, it will be considered as long term and you will be taxed at 12.5%. Otherwise, 30% at the slab rate. But there is another route whereby if you get all those documentation part, whereby you can get that, you can take the benefit of DTAA and there is no tax. There is literally zero tax on any sale of or redemption of mutual fund and other assets which are covered under residual clause.
Right. So you can basically avoid capital gains tax in mutual funds in India.
Correct.
While being a Oman resident.
Yes.
And Ankit Bhai, there are two modes, right? There is a preventive mode and there is a corrective mode. So if you can explain the difference between the two.
So, as Shubham said, there are different clauses which define which kind of income will be taxed where. And mutual funds come under residual clause which says that it will be taxed in the country of residence. Now, as akin to anything bureaucratic, there is a proper documentation for the same. How is that? First, you have to prove that you are a tax resident in Oman. And that you can apply once you have finished more than 183 days in Oman in a calendar year. So typically 183 days get finished in June or July. Then you apply for TRC, which will be valid till 31st December 26. I am taking example for this year. So you applied for TRC, they issue you a TRC. Switch off for the now. So they issue you a TRC which is valid till 31st December 2026. Now, once we get the TRC, we get another set of documents from the respective fund house. So all fund houses will have their different set of papers. And then third set of papers will be from Income Tax Department in India, which Shubham's team will help you to fetch. So you get TRC from here, which again Shubham's team will help you end to end. The second is we help you with mutual fund house documentation. And third is income tax documentation, which Shubham's team will help you. Once we get all these documents, we send it to fund house. Fund house send us an acknowledgement that yes, against this folio, this TRC has been updated, which is valid till 31st December 2026. Now, if you redeem your money before 31st December 26, then there won't be any TDS in case they have given this acknowledgement. Then at the time of filing the ITR, Shubham's team will help you to close the ITR thing so that the whole loop is closed. This is preventive part. The curative part is that we met Wealthy Nivesh or Shubham after we have already done the redemption part. In that case, documentation will be similar, but you can claim the refund at the time of filing the ITR. Thankfully, we have done both cases. By we, I'm counting both me and Shubham. We have done both the cases of curative also. Curative means that we have already done the redemption and we have applied for refund. And preventive also, what happens in preventive? We feed the documents to the fund house and fund house don't deduct the TDS. In fact, to cite you one example, there is a very senior banker in Saudi. Of course, I can't cite the name because of privacy. Shubham's team helped them to refund 80 lakh rupees of capital gain tax under this provision only. And another add-on that I would like to ask, because this is again frequently asked question, there is no difference between NRO or NRE in this. Even NRO monies can be used to avail this provision.
Right. And now we have spoken about mutual funds, right? Mutual funds can be tax-free for a resident based in Oman. There are 3 more products that are regulated by SEBI. One is PMS, one is SIF. SIF is a new product category that has just got launched last year, and AIFs. So what are the tax implications on PMS, AIFs and SIFs? And also if you can explain about direct equity. If someone is directly buying stocks in Indian market, what is the tax implication over there?
Yes, perfect. Check. Yes, it's very, I think it's very good question. See what happens. Let's go by very basic. If any person is directly investing into equity, see, if you are purchasing any equity stock, equity shares, you are becoming a shareholder of that particular company, right? You are becoming a shareholder of that company. Let's say it goes by the similar proposition of whether you are purchasing any immovable property at India or you are purchasing any equity shares. The logic behind it is that if you are purchasing any asset which is owned by any Indian company, then definitely the power to tax will rest with Indian government only. Then in case of equity share, the power to tax will rest with Indian government only. And if we go to PMS, if that particular PMS fund house is investing in direct equity, then definitely you will not get any DTAA benefit. If that particular PMS is investing in only fund, mutual fund, then you can take the benefit out of it. Then third comes AIF. In case of AIF, category 1 and 2, you will not get any benefit. Again, AIF, Cat 3, whereby they are investing in funds, mutual fund. Then again, based on our interpretation, we can directly invest on those things and we can take the benefit of DTAA as well, right? And yes, as rightly said by Ankit bhai, that prevention, whenever, see, we can plan it actively rather than planning it passively. That banker from Saudi planned passively, still he got the refund out of it. But this is not case for everyone, because taking refund out of Indian income tax authority is a very difficult task, right? So better to plan it actively, plan it properly, so that your TDS in the first instance cannot be deducted by AMC. If we submit the proper documentation part to them actively.
Right. So as I understand, when you become a shareholder in a equity or in a land, that is not covered. The tax liability will be as per Indian tax authority.
Correct.
when you become a unit holder, like you become a unit holder in a mutual fund, you become a unit holder in SIF.
Yes.
That is covered under the double tax avoidance agreement, and you can claim the benefit of taxation over there. In PMS, again, when the underlying is equity, then you become a shareholder, then it's not available. While when the underlying is a mutual fund, then double tax avoidance agreement can be applied over there.
Correct.
So I have one more point to add over here in context of PMS. So PMS can have underlying as stocks also and mutual funds also. And the framework of PMS is like that underlying is bought in your name only. So in case the underlying is stock, then it will be taxable because the stocks are taxable. But if underlying is in mutual funds, so like we have multi-asset PMS running for mutual funds allocation only, then it's again tax-free for you.
Shubham bhai, when you studied this, what are some of the precedents that you studied to establish this arrangement, or you establish this conclusion?
Yes, definitely. See, whatever interpretation which we are on what basis, we are not just talking on from the basis point of the DTAA or whatever textual content or whatever act is saying. Our interpretation is also backed by various income tax appellate tribunals, high courts, right? So one of the most recent case law, we are having one of the most recent case law, Anushka Sanjay Shah versus Mumbai Tribunal. She was a resident of Singapore. She sold debt mutual fund and equity mutual fund. Both, short term, long term, both were sold by her. Assessing officer, that is the first officer. Whenever you file your ITR, if you receive any notice, the first officer who is named as assessing officer. Again, he rejected her claim that you can't claim DTAA benefit on this particular mutual fund because it is, as per him, mutual fund is considered as share, or it comes under the Article 13, whereby he, as per the argument of assessing officer, he was of the opinion that this particular asset should be taxed by Indian government. But again, the case went to CIT, that's Commissioner of Income Tax. Again, Commissioner of Income Tax again proved this, withheld the same judgment of assessing officer. Then again, case went to Mumbai Tribunal. But then, in case of, wherever this tribunal, the first two layers whereby the question of facts are only considered. Whereas, if the case goes to tribunal, the question of law is also considered. The tribunal gave the judgment in favor of the Anushka Shah, and it held that mutual funds are not shares, whereby that particular assessee is not the shareholder of mutual fund. She is just a unit holder. Right? There are multiple other case laws as well. The previous one, the K.E. Faisal of Kochi, K.E. Faisal versus Kochi Tribunal. Then again, then one may also ask that if India is not taxing, any other country is not taxing, but Gulf or any Middle East country is not taxing, or whereby that particular assessee is residing, nobody is taxing. Then who will be getting benefited out of this? But again, we are also having one more case law. This case went to Delhi High Court, Saket Kanoi versus Delhi High Court, whereby Delhi High Court directly stated that, see, Indian government does not have power to go beyond its jurisdiction. It's up to that particular resident country or wherever that particular taxpayer is resident of. It's up to them whether to tax that particular asset or not, right? So in that DTAA, you both countries sat together, you both country wrote all those articles. Then when you both country mentioned all those articles that under residual clause, only that country will tax that asset class wherever that particular person is resident of. Right? So we are having multiple case laws. Anushka Sanjay, K.E. Faisal, Saket Kanoi, even Blackstone Capital. Blackstone Capital was a resident of or resident company of Singapore. Again, someone may ask that, sir, I am having TRC. I am having tax residency certificate of that particular company, of that particular country. I have submitted the form 10F. I have submitted that 10F. I have submitted the tax residency certificate with Indian Income Tax Authority by filing form 10F. But still, Indian Income Tax Authority has sent me notice. But again, we are having one more case law, Blackstone Capital's case law, whereby, again, tribunal or high court again held that see, you can't go beyond the tax residency rules of that particular country. If that country has approved that TRC, then Indian authorities cannot go beyond that.
Yeah. So the genesis of this problem lies in the fact that from investor side, everybody thinks that stocks and mutual funds are same. because they eventually, you are taking market risk only through them. But from taxation point of view, there are enough judgments which state otherwise.
Which are favoring the taxpayers or assessees.
Right. And Ankit bhai, and we have been working extensively over the last 2 years on the NRI channel, particularly on the GCC countries. What are some of the cases and precedents at Wealthy Nivesh that we have established?
I think my favorite one remains the same of Saudi client for whom we got 80 lakhs rupees refund. But having said that, there have been all kinds of challenges. There have been challenges where for some time there was provision for Izari in Dubai, that you need to have Izari. There have been challenges like you need to have a local bank account also. But thankfully, team has been able to surmount all those challenges. So if I talk about precedent, we have been able to get it done for Oman, Saudi, Kuwait, UAE, and Qatar. All 5 countries we have been able to do both curative side and preventive side.
Right. And Shubham bhai, finally, what are the complexities that come during the process?
See, getting benefit or getting any benefit from Indian income tax authority is very complex task, right? Getting refund, even if you are having any normal refund, getting refund itself is very complex, right? So the first and foremost thing is documentation part. Even if you are resident of that particular country, that doesn't mean that you can get the benefit of DTAA. You need to apply for tax residency certificate as well. First, as rightly said by Ankit bhai, that first you need to stay for more than 182 days in a calendar year. Then you can apply for, then see, let's say your TRC is approved. Again, you may miss the DTAA benefit. How? First, you need to close the loop. You are having tax residency certificate, you need to file that TRC with Indian income tax authorities as well, right? Then after closing this loop, then you can file the ITR. Again, in ITR, filing of ITR is not normal. Again, it is a sensitive. There are multiple other schedules and annexures, right? It is also another tedious or complex task. If you miss, if you make any mistake with regards to any DTAA schedules, again, we may get the notice from Indian Income Tax Authority and we again miss the refund from them, right? See, Indian Income Tax Authorities are not that. Yes, true.
Right. So it's always prevention is better than cure.
Correct.
And better to not get the TDS deducted than applying for a refund.
Yes.
Yeah. Thank you so much, both of you, for sharing your insights. And any questions we have on this part?
Yes, sir, please.
Thank you. But for me, I thought it's a kind of information gathering session. But now I'm becoming a kind of sample is going to be. Because I have done a lot of redemption without knowing this fact. Maybe my knowledge was not good to the level. But moving forward, I don't have a TRC here. So how do I approach this problem? I mean, already it was taxed.
Sir, TRC is applied to government over here, and we can help you after the session how to avail it. But the only prerequisite is first you should be practically a resident over there. It should not be that you have come to Oman for 6 months for some work and then you say, I need this. You should be practically working over here, and you should have finished 183 days in Oman physically. In the sense your travel history, net of your travel outside Oman, you should have been here for 183 days, and then our team will help you to avail TRC.
It's 180 months.
Sorry?
It's 180 months.
180 months.
Sorry, my bad. 183 days.
No, it's more than that.
He has stayed
He's
for
more than 180 months.
More than 180.
Great.
So, to get the TRC, is there any challenge here? I mean, apart from this?
No, it is very easy, sir. You can apply with Oman government as well. Otherwise, we will help you out.
Oh. Okay. Okay.
Hello.
Yes, sir, you can apply online, but make sure your documentation is proper. Otherwise, whatever fees you are paying to Oman government may be forfeited if your registration or if your application gets cancelled.
But we do have some agents also who can help you if you want some manual intervention for this.
Yes. Around 25 to 30 real. One time. Per year, sir, per year. Every year.
So one interjection over here, one interjection. I'm so glad this point is being brought out. What we suggest that as on today, you would be having some accumulated gains in your portfolio. Our suggestion is that this year take service from us, you redeem all of them, and you reset your cost price. So you bought it for 100 rupees, it has become 170 rupees. You sell off 170 rupees, you reinvest that 170 rupees. So next time when you do redemption, your cost price will be 170. And hopefully we are able to help you, redeem it tax free, so it becomes a lot of saving for you.
Once you have substantial capital gains, say of more than 25-30 lakhs.
And one more additional point before I forget. It's not that you have to avail TRC every year. You just have to avail TRC in the year of redemption, when you want to do redemption.
And this is the perfect time. See, what I believe, this is a perfect time, or 2026 is the perfect time to redeem or take benefit of DTAA. Why? Oman government will be taxing your personal income tax from January 2028, right, at 5%. If your income goes beyond 42,000, right? So it's better to take this benefit before 2028.
Enjoy till the party lasts.
Yes.
No. So again, that's a very common myth. Compounding doesn't work on your 170 rupees. Compounding doesn't work on 100 rupees. Compounding works on 170 rupees. So if you are reinvesting the money, your compounding will start from there.
It's just you are resetting the cost. You have invested 100 rupees, they become 170. Now you have redeemed 170 tax free. You are reinvesting the same 170 into the same market. The growth happens on 170 once your portfolio happens.
So अगर percentage में growth होनी है तो 100 रुपए पे भी उतनी होगी, 170 rupees पे भी उतनी होगी. So compounding doesn't suffer until unless you delay your reinvestment, or you reinvest lesser amount, then certainly your compounding will be lesser.
Only if you are paying tax, then compounding on the amount that you have paid on that, basically the tax, whatever compounding that was bound to happen, only that compounding gets affected. If you're not paying tax, just simply redeeming it and reinvesting, then there's no point of losing the compounding.
So Nitin sir's question.
Can I'm sure Ankit would not disclose, but he helped me in this TRC and all the tax redemption of mutual fund without taxation, so that I'm a first-hand beneficiary thereof. Thank you so much, Ankit, for that. And
so I was confused when you took mic, ki you should be having answers. Why are you asking question? Because you have already done it.
No. Yeah. I'm talking about the next phase now, which is I'll be filing taxes shortly. Two questions in my mind. I think we have to disclose these redemptions that I have done. I believe under section 91 or 90 of ITR thereof. True. This will be, I think, ITR 2 that I have to file. That is one thing. It will be filed in section 90, or how does it work? That is the first question that I have. Second question that I have is, I haven't done through NRO. All my investments have throughout been through NRI. So NRO, he mentioned, has the same status in terms of taxation when it comes to DTAA clauses. Is there any other tax that will be applicable when it goes back to my NRO account? Would the bank deduct the TDS at the time of redemption going back into the bank account from the mutual fund? Or any other taxation that will apply if I go through the NRO route? So this is the second question. I have more. I'll come back later after others have opportunity.
Yes. Let me first answer the question number 1. So section 90, 91. In section 90 or 91, it talks about this thing that whatever in tax rate, whichever tax rate is beneficial for any assessee, Indian Income Tax Authority will apply that that particular tax rate. See, not only mutual funds, sir, there are multiple other incomes are covered, be it dividend. Let's say India and Oman is having, there is some article in India and Oman DTAA, whereby if you are earning dividend, then you will not be taxed at 30% or maximum marginal rate. You will be taxed just at 12.5%. If you are earning interest, then you will be taxed at 10% only. So section 90 of Indian Income Tax talks about that whichever tax rate, whatever tax rate at tax rate as per DTAA or tax rate as per income tax. Whichever tax rate which is more beneficial to the assessee, we will tax that particular tax rate to that assessee. Coming to your second question, NRO or NRE. See, if you go by basics, NRO is the account where you store your Indian sourced income. NRE is the account where you are storing your foreign sourced income. Just transferring from NRO or NRE does not mean that that entire chunk of money lying in your NRO account belongs to Indian sourced income. Right? So from the perspective of investment, from the perspective of Indian Income Tax Authority, you are just required TRC, 10F, file your ITR properly, that's it. Authority may go beyond your statement if you have taken some undue advantage or you have done some laundering work, then only. Otherwise, NRO, NRE account doesn't even matter.
So I think we missed one part where you asked when you take this money, redemption money from NRE to NRO or anywhere, will there be TDS?
No.
So as Shubham rightly pointed out, banking transaction doesn't result into TDS. Whether you move money from NRE to NRO or other way around, it's never that any TDS will be deducted. Certainly TDS is deducted for payment of interest, etc. Otherwise, no tax implication.
Asking one second thing, not directly related, if I can ask, I don't know. Some of, because you mentioned, covered Canada, US, Europe, UK, so on and so forth. In some of my transactions, especially I believe it's dividend, I get a withholding tax debited by, I believe, say if it's coming from US, therein. Honestly, it's not a significant amount, never bothered about it. Any idea if there's, as a resident in Gulf, is there a leeway that can be used for that avenue? So the double holding taxes in my investments.
Okay, if you have invested in US market and you are living in Gulf, so they are deducting withholding taxes.
Correct.
Right. So, but again, they will deduct withholding tax. In any case, they will be deducting.
We cannot take it back.
No, because US and other country DTAA is not that beneficial as compared to India and other country DTAA.
So I would like to share Nitin sir's story, and I am doing it now that he has authorized. So Nitin sir is my college senior from IIT Delhi. I met him through LinkedIn, then we started chatting and we met in the month of February. Usse pehle Akshata was following up with him, but thankfully, as happens with personal meeting, it became so easier. And we were able to avoid TDS for Nitin sir when he redeemed his money in March. So he's a living example that we have been able to do it in Oman as well. Basis production of TRC only.
How can you do it in March? You said 180 days in a calendar year?
Sorry, sir? Okay, how we can do it in March? Right, sir, if your redemption is between that particular calendar year, then definitely based on that calendar year, if you have done your redemption in between January to December, then definitely that particular TRC is valid for your TDS or refund claim. But if you have done your, sorry, sir? See.
I need to check on this. I'll check with sir and I'll come back to you.
Sir, there are two options, sir. Sir, there are two options in the entire Middle East. This TRC it's very calendar year is fixed. You will get you will 100% get the TRC for the calendar year. But there is another option. You can apply TRC for any last 12 months, any previous 12 months. If you're applying TRC in the month of April, then you can apply it from April to March. But again,
Nitin sir, do I remember correctly कि आपका redemption हमने March में ही करवाया था?
No, it was done in December.
Okay.
But while
then
applying,
my bad, sir.
While applying for TRC, I remember the Oman authority asked for the time for which you wanted. So you can ask for the next 6 months. But if you are applying in the month of December, you can request a TRC till June, is what I vaguely remember, but you'll have to check once.
For 12 months, for 12 months.
To get the advanced TRC, that's the best point.
Mike.
Do you have any insights about NRI selling their properties?
See, Indian Income Tax Authority are making it very easy for NRIs now. Earlier, NRIs had to take or had to apply for TAN first. TAN, then only they can sell the properties in India. Because any buyer will be deducting your TDS. Whenever he is paying to you, he will be first deducting tax at 20 plus cess plus surcharge, that it goes beyond 22% as well, right? But as of now, your buyer will deduct TDS at only whatever TDS rate which is applicable for any resident Indian, 12.5% plus cess, it will be deducting at that rate only. But again, now onwards, you are not required to apply for TAN. PAN number is also sufficient as of now. Based on the PAN, that buyer can also file your TDS. But again,
Akshata,
yes, in whichever financial year, whichever, as of now, see, new income tax act 2025 is now applicable. So instead of financial year, they have named it as a tax year. They have made it very simple. So now onwards, in any tax year, right from April to March, you have sold any property, then again, after that particular financial year or tax year is ended, after 31st March, you can file your ITR, and on that ITR, you can disclose all these property transaction, and if any TDS has been deducted by your buyer, then first that TDS will be used for paying the tax on that particular capital gains, and whatever TDS is remained, you can take the refund out of it.
Akshata, do remember to pass on mic to sir also over there. He had been raising hand for quite some time now.
Sure. Okay, just one or two things. You said NRO interest for which TDS has been done, that also can be claimed, right? Wanted to be sure.
NRO interest is, sir, NRO interest is taxable.
SB account interest.
Yes, saving NRO interest is taxable. Saving interest or FD interest. NRO or NRE is exempt, whereas NRO is taxable. But the maximum interest rate, be it from interest on any interest, fees for technical fees or royalty, all these three income are taxed at the maximum. There is maximum capping on this particular income basis, 10%, as per DTAA between India and Oman. But again, if you want to claim all these benefits, again, be it mutual fund or any other benefit, you need to apply for TRC.
No, we will apply for TRC. We will do it all as per the documentation required. My doubt is, if a TDS, as say for example, you sold a property and you got a huge interest in your NRO account, can that interest be claimed? TDS has already been done because it is in the past. Now when you file the return and if you do all these formalities, can we claim that TDS also back? No deducts TDS on the NRO interest?
Sir, as per my interest, you will not get, you can't take the benefit of this. Why? Because selling of immovable property, it itself proves that your source of income was from the particular whatever asset you sold, that particular source was from Indian land only. So as per my interpretation, you will not get this maximum capping tax rate on NRO interest.
I respect your opinion, but I think there are two different things. How you got money into your SB account is different, whether you sold a property or anywhere else you got. The point here is the interest which you are paying on NRO account, because 30% is deducted by default. That's my opinion, but I could be wrong. The second question is, can you do it for the previous years?
No.
You cannot reopen your file for the ITR already formed?
No. There is option to file your ITR for last 4 years, but if that ITR or if that income results into, if that particular, whatever you can say, if the conclusion results into a refund, or if you are getting benefited out of that return, then you can file your ITR, but you can't be benefited out of it.
No, that is the purpose of refiling, which means, can we get a DTAA of last financial year?
No.
Can we get a TRC certificate for the last financial year? Then only you can claim those mutual funds which you have sold and make it tax-free. That is the purpose.
Sir, we can do it for last financial year. Now sitting in June 26, you can claim it from April 25 to March 26. But before March 25, 24, 23, you can't claim DTAA benefits.
Fair enough. And that's why my last question is, you said in this calendar year 180 days, which means you cannot do anything until July. But your returns have to be filed by end of June, isn't it? So is it not the financial year which counts, or is it the calendar year? If it is financial year, then 180 days in financial year, I have been in Oman and I can file it tomorrow. But if you say that you have to stay in this calendar year, then you qualify to apply only in July. And then whenever you get the documentation, and then you have to file the return? That's the question.
No, sir. See, tax year and assessment year. Assessment year is a year where we are filing our ITR. So in July, till July, we need to file our ITR. But for taking TRC, we need to take TRC for previous year. Let's say, I understood your question that since I am filing my ITR in July 26, how can I get my TRC for the calendar year 2026, right? So, but see, in this case, so you need to apply for TRC for last financial year only, last calendar year only. So, it is very easy to get TRC for last calendar year. And in fact, for the current calendar year as well. So definitely we are, I don't think so anybody would have redeemed in the current calendar year. For current calendar, once we get the TRC for current calendar year, be it for 26, you can again, by taking the TRC for 26, calendar year 26, you can take the benefit in 27.
I have one request, because the topic of discussion is mutual fund capital gains. So whatever questions we have beyond that, let's take them with Shubham one-on-one. Anyhow, whosoever from our team is coordinating with you, they can get a one-on-one discussion done with Shubham or any of his teammates.
So you had a question.
Yeah, so we'll take one last question.
Yeah, when you say 182 days is the qualification for getting a TRC, and which is basically an NRI status to get a qualified by NRI. So what happens if the person has a dual residency? Like a lot of people here, they resident in Dubai, they resident in Oman equally. So what happens if a person is staying 3 months here, 3 months there, means 50-50 or somewhere. He's not completing 182 days in particular one country. What happens to that?
See, from India perspective, you will be treated as non-resident Indian.
Yeah, that is right.
But from the country perspective, where you need to apply for TRC, that country will not give you or will not approve your TRC application.
Exactly.
So first we need, from India perspective, you will be NRI, but if you want to take the TRC of that particular country as well, you need to stay there for more than 182 days. There is no other option, sir.
Okay. What happens if by that time we redeem the mutual fund and by that time we move to India, becomes a resident Indian, and we have not have that 182 days. So is there any grace period which can be provided, which is available?
No, sir. There is no such grace period, sir. If you are having TRC for that particular valid period, in the TRC that validity is also mentioned or tenure is also mentioned. If you have redeemed your mutual fund in that valid period, then definitely you can take the benefit out of it. Then after claiming all those DTAA benefits, then you can move to India. Then again, you can take the benefit.
No, my question is, the day we redeem, I am resident, but I have not finished 182 days. But I moved back to India. So what happens?
Gaya, sir. 182 days तो सर 3 कंडीशन है. 182 डेज इंडिया में भी रहना है, सॉरी इंडिया के बाहर भी रहना है, तो आपको एनआरआई का स्टेटस मिलेगा. बट उस कंट्री में भी रहना है जिसके साथ इंडिया, ओमान, इंडिया और उस कंट्री का DTAA है, राइट?
अक्षता जस्ट आस्क दैट जेंटलमैन ना,
क्योंकि सर वो TRC तो वो पर्टिकुलर कंट्री ही अप्रूव करेगा.
सर आई थिंक जेंटलमैन ओवर देयर. सर यू हैड सम क्वेश्चन?
Yes.
Yeah, sure. But I
Thank
like
you,
your
sir.
persistence, sir. You were continuously looking for mic.
Yeah, this was a question maybe relevant to many of the NRIs. Suppose husband and wife both are in Oman. Husband is working and wife is on the residency of the. She is not a working woman, but she is on the family visa. So can both of them take DTA benefit, or is it because as per FEMA both of them are non-residents? But what is the position in the income tax? Whether they will have to, she can also claim the benefit of DTA in investments and all this.
Sir,
Thank you.
Sir, this we will discuss with you offline.
Yes, sir.
Thank you.
But I am sure our answer will make you happy.
I think this line will be deducted from recording as well.
Any other question that we have on mutual fund taxation? So I'll summarize some bullet points, and I'll summarize it because I understand it's a very relevant topic. आज की डेट में अगर हम लोग यहाँ पे बैठे हैं तो उसका सबसे बड़ा रीज़न यही है. Let me take this opportunity to also thank Shubham, who was very patient in developing all this framework, Our compliance team also, which coordinated with all the AMCs to get the relevant documentation and all. And it's because of this that we get a hook. So एक क्वेश्चन आता है कि आप बाकी लोगों से कैसे अलग हो, तो हमारे पास एक पॉइंट कहने के लिए होता है कि हम आपको इस चीज़ पे हेल्प कर देते हैं. और कई लोगों का हुआ कि हमने उनका पूरा रिडीम करवा के री इन्वेस्ट करवाया, तो दे मेड ए लॉट ऑफ टैक्स गेन, दे सेव्ड ए लॉट ऑफ मनी. So for the purpose of clarity, I'll just summarize some point. There is a double taxation avoidance treaty between India and Oman, which define which income will be taxed in which country. Under that treaty, mutual fund taxations are supposed to be taxed in Oman if you are a resident of Oman. Now, like anything bureaucratic, there are papers involved, so you have to take TRC from Oman government. That has got nothing to do with Indian government. Oman government will validate that you are a tax resident over here. That document, along with certain documents from respective fund houses and income tax department in India, are produced to mutual fund houses before the redemption part. Mutual fund house confirmed that yes, we have updated this TRC. उसके बाद एक पॉइंट जो मैं स्पेशल मेंशन करना भूल गया, हम आप लोगों से 10,000 रुपये का रिडम्पशन करवाते हैं, छोटे अमाउंट का, 5,000 का, 10,000 का. नितिन सर के साथ हमने वही करवाया था. आइडिया ये है कि फिर अगले दिन SOE जनरेट होगा, यू कैन सी कि आपका TDS कटा है कि नहीं कटा है, बिकॉज इन SOE यू कैन सी योर TDS implication. So once that is done, then we ask you to go for higher amount of redemption. Now this is the preventive part. जो creative part है उसमें शुभम स्ट्रीम will help you अगर आप लोगों का last year कोई redemption हो चुका है. So that's the long and short of it. जिस provision के अंदर है वो भी मैं बता देता हूँ कि एक residual income है, residual income के अंदर ये आता है, and that's how you can claim it. अगला जो एक बहुत बड़ा clarification है वो ये है कि स्टॉक्स और म्यूचुअल फंड को लेके क्लैरिटी अथॉरिटीज से आ चुकी है, जो इनकम टैक्स ट्राइब्यूनल्स हैं वहाँ से भी आ चुकी है और हाई कोर्ट से भी आ चुकी है, जहाँ इट हैज़ बीन सेड दैट इट्स नॉट टैक्सेबल एज पर DTAA. सो स्टॉक्स एंड म्यूचुअल फंड्स आर नॉट इक्विवेलेंट फॉर टैक्सेशन पर्पस एज फार एज DTAA implication is concerned. I hope this session was useful, and of course we'll be very happy to take any of your follow-up sessions during the day today itself. And certainly, as I said, you can have one-on-one fixed with Shubham. Shubham helps our client on their taxation part, and you can coordinate with the resource of Wealthy Nivesh, whosoever has invited you and coordinated your attendance over here. So thank you, Shubham. Yeah. Again, my heartfelt thanks. It's because of you that we have been able to work so aggressively in Middle East market.
Thank you so much.
I hope everyone is awake now. After this session, now that's why we have kept this session post lunch.
Good to see कि इतना सब स्वीट खाने के बाद भी सभी sincerely बैठे हुए हैं.
पैसे की बात है ना.
Yeah, thank you so much.
Thank you.
Thank you.
And we have also done one podcast with Shubham. Our channel's name is My Money Panda on YouTube. I've done 2-3 podcasts with Shubham on the same. It covers even more questions than we asked over here. And I will honestly request everybody to subscribe to our.
Thank you so much for simplifying a complex topic and providing practical insights that are highly relevant to our NRI community. Now, moving forward, markets often go through phases of uncertainty and volatility. During such times, asset allocation becomes one of the most powerful tools available to investors. Our next session focuses on how a disciplined multi-asset approach can help investors bring structure and stability to their portfolios. To share his expertise, please welcome Mr. Aditya Gupta, CIO of Wealthy Nivesh. Please give a big hand of applause for him.
Yeah, sorry about this. So I am in different role today, and a lot of what I am planned to cover in this session has already been covered by my colleagues before. And so I love to talk about asset allocation. That's one of the favorite topic of any asset manager or wealth manager. And anytime you ask them, what should we do on a public platform, every asset manager will say that maintain your asset allocation. But very few people understand how to define what is your asset allocation. Particularly, it's a very personalized topic. To be fair, to identify your asset allocation, identify your goals, it's a very personalized topic. So there is no set rule on that if I am of this age, I should have this much asset allocation in a particular asset class. There are a lot of factors that affect this, that should be considered while determining it. Your age, your financial assets, your liabilities going forward. And if I may ask, so currently there is a lot of negative sentiment on the Indian markets, lot of negative sentiments on the Indian currency. So can you say that, say, Taiwan or South Korea or say US markets, will they be the best performing asset class over the next 5 years? Can anyone say that? Can anyone say that India is going to be the best asset class over the next 5 years? No. If I am saying that, I'll be fooling myself only. So nobody can say that this is going to be the winner asset class over the next 5 years. Only what we have to determine, whether our portfolio is prepared to manage volatility over the next 5 years. So that is the question we should ask, whether our portfolio is prepared for that or not. And I believe this chart already, Vinayak has already showed that every time, every year, the winning asset class is different, right? If I talk about 2023-24, everyone was talking about India. And everyone was saying, if you are not allocating India, where the hell are you allocating? Right? Then 25, our earnings slowed down. Then it got coupled with tariffs. And now we have hit with an unprecedented war, which affects the price of a commodity, which we are totally dependent on. But many of our audience are here in the oil and gas industry experts. Do you really believe that oil will stay at $100 or $90, say after 2 years, 3 years? It's a commodity at the end, right? So it's very difficult to predict the winning asset class. You only have to see whether your portfolio is prepared or not. Right? I will show this one data. And this is a mind-boggling data. If it's not visible, I'll just read out. So this analysis we have done over the last 25 years, from 2001 till March 2026. The last average annual return, that is rolling return on a 1-year basis for a debt instrument. So if you had been investing in a 10-year GSEC yield for the last 21 years, your return would be about 6.85%. Average annual return would be 6.85%. And many of us would be engineers, and we always like to define with numbers. And how we define risk in the market is with volatility. So we use volatility or standard deviation as a proxy of risk in the market. So volatility or the risk in a pure debt portfolio is 6.38%. So average return over the last 25 years is 6.85%, volatility is 6.38%. If I add just 10% equity to it, my my returns increases by almost 1.2%. My average return would go from 6.85 to 8%. But the volatility of my portfolio would actually reduce. The volatility of my portfolio will reduce to 5.73%. So the sense is debt is also volatile. If you are investing into US bonds, into any debt products, it is volatile with respect to the interest rate environment. If you are adding 10% equity to it, it reduces the volatility, right? Government treasury bills are also volatile, sir. If government increases the interest rates, your treasury bills will be marked to market. They will be, you will see a mark to market loss over there. If sir, you have bought treasury bills today, tomorrow government increases the interest rate. Tomorrow if you will go and sell those treasury bills, you will sell at 98 or 99 if you have bought at 100, right? And particularly so this is how the efficient frontier works, that when I'm at 100% debt, the x-axis is my risk and y-axis is my return. So my return is the lowest. But if I just add 10% equity to it, my volatility reduces. And now just see how this graph changes if I just add gold to it. And I also like to talk about commodities. I like gold as a asset class. It's one of the asset class that has always beaten inflation over the last 100 years. If you just want to beat inflation, you can just simply buy gold, and that actually beats inflation. But if you just add 20% gold in your portfolio, this is how the efficient frontier changes. So the risk, you can see the returns are going up and it has shifted left. So the risk in the portfolio goes down. So just by adding 20% of the gold, your risk return profile has completely changed. So someone asked how much we should be in gold. We always recommend our clients to have at least 10% allocation to gold. And as Indian households, we always had that kind of allocation through, say, physical gold. But we recommend that you should have at least 10% in this commodity. It works beautifully as a hedging asset class. Also, we can't predict a winning asset class. That is for sure. But can we make sense that a particular class is overvalued or undervalued with respect to other asset classes? The answer is yes. You can make some sense out of it when we see 23, 24, when everyone was talking about India, valuations were really expensive. You would see all the fund manager commentaries that India is expensive. 2024 it was the time when all the fund managers, we were also cautious. The clients on the other side, we used to get those queries, you invest in the most riskiest fund for me. That was the bullish phase, euphoric phase. I always tell my team that our job particularly is to, when the markets are in the euphoric phase, in the bullish phase, we have to de-risk their portfolios. When the markets particularly are in the bearish phase, that is the time when we have to increase the risk in the portfolio. And what we have done over the last 3 years, so this is easier to say that buy low and sell high. But what we have done over the last 3 years. So in 23-24, when we started in December 22, we were almost 60% allocation in mid and small cap. In December 22, when we started, we allocated 60% of the money in mid and small cap. What that did, that gave us a rally of 17% till mid 2024. And in mid 2024, that was the time when we were starting getting cautious of the valuations. We started recommending our clients to de-risk their portfolios, move to hybrid strategies, move to multi-asset strategies, move to commodities. So we were able to capture the upside till June 2024. Again, from June 24 till September 24, we were proved wrong because markets were just going up. But after September 2024, when we saw the correction coming in, our portfolio saved a lot of money. So I always say we are a very research-oriented, data-driven, value-conscious investment house. In whatever asset class we find value, we get the allocation done into that particular asset class. So this is one portfolio which you can say we started in October 24. Since October 24, almost all the indices you can see over here are down by 5 to 9%. Our portfolio is up by about 4.2% because we have been able to implement those valuation-based calls. Also, in 2024, when the market was so much euphoric, everyone was talking about just mid and small cap segment. We got the investments done in hybrid funds because through that we were getting debt exposure, we were getting commodities exposure, and the portfolios that started in October 2024 in a multi-asset category or in a hybrid category, that has resulted 7.9% positive return versus someone invested in an equity fund is down by anywhere between 5 to 9%. Again, I'll just come to this slide. So these are the asset allocation calls that we have taken over the last 3.5 years. In December 2022, we were overweight on mid and small caps. Then in June 2024, we were underweight on equity, underweight on mid and small caps particularly. In May 2025, we gave a 10% tactical call to silver when silver was almost at $33 per ounce. Because I didn't know that silver would have a 300% or a 200% rally. To be very honest with you, when I gave a call of allocating 10% to silver, I didn't have an idea that it will have a 200% rally. How we've made sense that it's a good bet, gold to silver ratio at that point was 110 times. When you look at the data of the last 150, 200 years, it has been in the range of 50 to 70 times. So there was good margin of safety. And we should always allocate in an asset class which has good margin of safety. Then when silver went from $33 to more than $100 in Jan 26, then we again got cautious. We gave a profit booking call over there. So it was not that we predicted that this would happen. It happened because we saw margin of safety. We saw that it will add a good hedge to the portfolio, and that's how we added it. And these are the different portfolios which we started at different time frames. In the portfolio that we started in December 22, it is beating Nifty 500 by almost 8%. Again, the portfolio which we started in September 2024, we had almost 15% allocation to gold and 10% to silver in that portfolio. And you can see that has beaten the market by almost 10%. The XIRR since September 2024, this client is doing an SIP of 51 lakhs with us on a monthly basis. And if you would have invested in just Nifty 50 or Nifty 500, the XIRR would be 0.44%, while our XIRR is almost 10.38%. So this is the result. We were able to add an asset class which looked attractive at that moment. Then, so we have been working since December 2022, we have been working on the distribution mode. And now we have also got our PMS license. We got our PMS license in September 2025. And we onboarded the first client in November 2025. Since November 2025, these are the numbers as on April. We don't have the numbers as on May. We'll get the numbers as on May in a few days. But as on April, from November 2025, the market is down by 4%. Our portfolio is almost at par. So we are not saying that in a short time frame, 5-6 months, we can generate a double-digit compounding when the market is not doing well. But we are anyways able to protect the downside, because in November 2025, we were not fully deployed. When we find good valuations in March, we were able to deploy it at that point. When again commodities corrected, both gold and silver corrected post-war, once the war broke down, we were able to add some exposure over there. So that's about it. My idea for this presentation is not to predict the winning asset class over the next 2 years, 3 years, just to have that sense that whether your portfolio is prepared for the next 3 years, 5 years. Thank you so much. Yeah, I think we have had a lot of questions, but if you have any questions, we'll be happy to take it.
Thank you, Mr. Aditya, for demonstrating how well-structured multi-asset strategy can help investors transform market uncertainty into long-term opportunities. Now, moving forward, building wealth is important, but ensuring that wealth is preserved and smoothly transferred to future generations is equally important. Our next session addresses a subject often overlooked by absolutely essential: succession planning for NRIs. To share valuable insights on this topic, we invite Mr. Jugal Popat, co-founder of Wealthy. Please welcome him.
Hello. Hi everyone. Last session, a lot of pressure and a lot of expectations from me. I'll try to fulfill that as much as possible. Thank you for being a patient audience. So we've talked a lot about how will government get our money, how will AMCs get our money, how will Wealthy Nivesh get our money. But let's talk about how will our family get our money, okay? What you see here behind me is the circle of life, okay? Everyone sitting here is gone through it, has gone through it, or is going to go through it, okay? It starts with, their education. They all career, savings, investments, multiplication, diversification, right? That circle goes on. And we spend so much time thinking how to get that extra percentage of return, how to save that extra rupee from the taxes, but we do not spend a moment to think what will happen to all of this money, all of this wealth after we are not there, right? This last and key part is succession planning, which is also the logo of our company. Some interesting number on screen here. This is the amount of money that is lying unclaimed with the government of India. When I say unclaimed, somebody like you, your parents or your grandfather had this money invested somewhere and they never told their family about it and they went to meet God, okay? Now this money is with government of India. Look at the corpus amount, it's as big as some economy out there, okay? So to prevent this from happening in our families, we want to ensure that we leave information with our family members. Whatever I own today, at least I'll inform my family, right? Today, people sitting here, how many can say with confidence that 100% of my assets are known by my spouse or my children or my parents, whoever you want to share it with? With 100% confidence, there is so much stigma that we have internally. If I share this, this will happen, they will think about me like this, they will fight, etc., etc. So if you don't want to share it right now, leave a piece of paper behind which tells them about what you own. Second important statistic out here is the number of fights. Now, the biggest argument that people have is, भैया मेरी family ये नहीं करने वाली है, बहुत शांत लोग हैं. Okay, everyone is very, very cordial in my family. The thing is, fights don't start for money. Fights start with ego. I don't know how many will agree with me. If they have had larger families, friends, relatives, you would know that people inherently are not greedy. It is the egos that clash in family. And we don't want that to happen in any of our own families, which is why, again, a good plan in place is very important. Why today people are not writing their wills? Okay, number one, where to go? I want to write my will, but I don't know where to start. Who should I go to? Who should I trust with my important information of life? Secondly, delay and procrastination. This is one topic which is not very urgent. Aaj nahi kiya to next week karte hain. If not next week, let me do it next month, right? So there is no sword hanging by our neck that, okay, you have to file taxes by 31st of July, or you have to file your returns by X date. But there is no date for this, right? And hence people keep procrastinating. Finally, a lot of people have myths and doubts around this subject. I'll cover some of the main myths and doubts that people have around this. Very interesting. Why am I taking this session today? Why has Wealthy Nivesh team invited us to be here? So we've been doing this for the last 12 years. Wilgini was founded by my father. He's a lawyer and company secretary, leads the legal side of things still. And we've helped more than 20,000 customers across India and NRIs from 32 countries to help make their succession plans for their families and themselves. We are also the official partner to HDFC Group, Tata Group, ICICI Group, and all leading financial institutions in India. So basically, if you're a client of these organizations, we are likely listed on their website. Their RMs are trained by us for these matters. So we are a leading name in the country, and which is why we are trying to spread awareness to people around this very stigmatized topic. Inheritance tax around the world, okay? Very interesting topic in case, you have invested money in other countries, you're holding US shares, you're holding assets in UK. People do invest in multiple countries. Look at the numbers on the screen here. It goes up to 55%, right? Laws in Middle East are slightly murky. I'll cover that also if we get the time towards the end of this session. But I've tried detailing out what happens if you own an asset in Oman today, if you own an asset in Middle East today. How does the succession work? But majority we'll be covering what happens to assets owned by you or your family in India. Any idea how much is the inheritance tax in India today? 0, yeah. So as of June 26, the inheritance tax is 0. But as you know, our government likes taking taxes on things that earlier didn't tax. So soon there are talks going on in political circles that our very respected Nirmala Tai might come up with some gift for the wealthy and for the NRIs or etc. for inheritance tax. Even if it is 10%, okay? It is a big chunk for our families to part ways with and give it to the government. So how to plan around it is something we have to start thinking. Inheritance laws in India. Okay, I'll throw this another question out to the audience. Who gets the money if someone passes away in India? Okay, if you are an Indian or you have assets in India, if you die, who gets the money? Any answers? As per the religion. Okay, let's give me an example. Okay, if I'm following. Okay. Straight line. Which family members, according to you, follow the straight line? Okay. Spouse? Spouse is first. Okay. Second, children. Okay. Okay. Are you sure? Okay. Okay. Any other answers, guys? What do you think? Who gets the money if someone dies? Okay. Parents also get straight line. Okay. 50 to 60 combinations are there. Okay. Any other answers? Nominees. Okay. Nominees. Okay. Nominee doesn't get. Okay. We have a counter here. Nominee does not get the money. Okay. So first answer sir gave, in India, if someone passes away or an Indian or someone holding Indian assets, if they pass away, their assets are distributed as per the religious laws. Okay. If you don't have a will, if you have a will, throw this out. Okay. Unless you are a Muslim, because Sharia law has some restrictions. But if you've made a will, these laws don't apply. But I am a Hindu, so Hindu Succession Act applies. Same applies to, Sikhs, Jains, Buddhists. If you're a Christian, Parsi, sorry? That's what, yeah, Hindu Succession Act, yeah. Yes. In the Indian Succession Act, the Parsis and the Christians come under, okay? So let's take an example. I'll give you my own example. I got married last year, okay? Now, let's look at my succession plan, okay? If I don't have a will in place, my money will be equally distributed amongst my mother, my wife, and all my children equally, okay? So these are 5 people, 20% each. Let's say I don't have children. 1 year is too soon for me. I don't have children. So now it gets distributed amongst my mother and my wife 50-50. Okay? I don't have a will. If I really love my wife so much, I'll write a will and give her everything. If I hate my wife already, I'll write a will and give it to my mother. Right? But if I want my wishes to work, I need to make a will. Right? Let's say I'm unmarried. I wish I was unmarried. But let's take for an example, I was unmarried. And I don't have a spouse, a children, somehow I don't have a mother. So then my assets are given to my father. If my father is surviving, he gets my money. If father is also not surviving, my money goes to my siblings, brother, sister, whoever. And if they are also not surviving, it goes to my father's side of relatives, then my mother's side of relatives. Long story. But this is what applies to every Hindu male out there if you don't have a will in place. Clear? Now let's look at what happens to a Hindu female. Any thoughts? Who gets the money if a Hindu female passes away? Spouse doesn't get, only children. Is that your wish or is that the law? Any other answer? Spouse gets it, okay. First spouse and then children, okay. Mother, okay. Okay, so let's look at what happens when a Hindu female dies. First, equal distribution amongst husband and children, okay. So if I have one husband and 3 kids, so 25% each to everyone. Let's say there was an accident, okay. Wife was traveling with her husband and they died in a car accident, no children. Who will the money go to next? Who will go the money? Okay. Okay. We'll say the wife, it was earned by the wife. She had bought the house or she had made investments in mutual funds and shares. It was her money. Who does it go to? Nominee, okay. You want to wait for the surprise? It goes to her in-laws. I bet you didn't know this. This is the Hindu succession law today in 2026. If a female dies without a will in place, her money goes to her mother-in-law, father-in-law, brother-in-law, sister-in-law, mother-in-law. Her own parents come after this if none of them are there. That is the reality of the law today. Okay? And I made this slide specifically for this session because it kept coming in every time. Yes, sir. I hope. So basically, government has not changed law since 1925 when it was written. The last amendment that came for females, Hindu females, was in 2006 when they became a equal share in father's property. Earlier what it was that, okay, if you're married, then you don't get an equal share in the father's property. Now they have it. But this law still hasn't changed. So if you have a mother, sister, wife, and they are owning assets, significant assets, they also should have a will in place. Okay? Yeah. Yes. No. So mother-in-law, money goes to the son. Right. I'm sure there is some sneaky sister-in-law sitting out there for the money. She'll ensure she gets it. But then after, if nobody in class 2 legal heirs, then her own parents will get the money. Her own siblings will get. They are in third category. Yeah. Yes, sir. Sure. I'll cover this. I have this covered very detailed. Yeah. Please. So what sir was saying was basically if it is self-acquired property for a female or it was bought by her husband or her father. So those have different rules. If her father has bought it, it goes back to the father side of things. If it was bought by her husband, then it goes back to the husband. But here we are talking about her own assets, right? So it's slightly complex for females. Hence we say, however that asset has come to her, make a will, no other laws than are applicable, right? She can give it to whoever she wants. Okay? Now let's look. You keep me last in all the sessions. Anyway, Shah Rukh Khan comes in the end. I know all the award shows. Okay, so I'll perform in the end. So some succession tools that are relevant to you sitting here. One is a will. Okay. One is a private family trust. One is a gift deed that you can do while you're living. And finally, a power of attorney. I'm sure a lot of you have power of attorneys given or you are planning to give it to someone in India. Some common myths and misconceptions. 3 I will cover. I had 8, but I cut it down to 3. One, I'll do it after my retirement. Unfortunately, we don't come up with a date of expiry printed on our backs. It comes to us all of a sudden. And which is why we all buy insurance. I'm sure you all here are having some kind of life insurance. I bought my first life insurance at the age of 22. I have paid it off also. So now I'm happy. If anything happens to me, my mother and my wife will get it. So now you have to ask yourself, if you bought insurance at a young age, what were you thinking? Were you thinking, yaar, if I buy this, I'll die. I will not buy it. No, right? You were thinking, okay, if anything happens, bad day comes in my family, they are safe and they are protected. So that's the same logic to be applied for a will or a family succession plan also. Next one is, I don't have a lot of money. I don't think that applies in this room. I should have removed this slide. But many people like to keep saying, okay, this is only for the rich. See, money is relative. Wealth is relative concept. You have a house of whatever, $100,000, I have a house of $50,000. Someone here has a house of $400,000. For that person, that family, that house is valuable, right? You can't say that, okay, that's a cheaper house, they don't need to make a will. For that family, that money value is higher. They have to make a will in place to prevent fights. Secondly, if you only have one child, the argument here is, does that one child know where your assets are? I'm sure a lot of you have scattered family members who are sitting in another city, another country. Do they know where your investments are? Where have you kept your FD? Where have you kept your AIF, PMS, whatever you're investing in these days, right? So it is important to write it down. Third, people feel that I've bought a house in joint name, my spouse will automatically get it. No. In a jointly owned asset, you are a 50% shareholder, your spouse is a 50% shareholder. If you die, your 50% is distributed to your legal heirs. Her 50% goes to her legal heirs, right? We discussed what legal heirs are in the previous slides. So both husband and wife need to come together and make a will. Last, nominee we had, yes sir? So nominee concept, the thing is, nominee is a caretaker of your assets, okay? Nominee is not the owner. So today when you're making mutual fund investments in India or any bank accounts you have, FDs you have, you've kept your spouse as a nominee. If anything happens to you, government will give the money to them, but they are taking care of it until the distribution happens to your legal heirs. So tomorrow, let's say you've put your mother as a nominee. Most people keep their mothers for the younger part of their life, and then they keep their spouse. But that is where the confusion happens. Mother is the nominee, but then wife says, I am also the legal heir. Mother says, no, but it was on my name, I am the nominee. So you get the drift of it. Nomination concept is a confusion that people have, which we are trying to break. It is not succession plan, it is a caretaker arrangement. Yeah, if family is cordial internally, they can distribute it amongst whoever they want. That's fine. We are... Bank gives it to the nominee. Their job is, we don't want to be party to any fights in the family. Whoever is the nominee, take the money, then you resolve in yourselves. Right? And finally, folks say that my financial advisor knows everything. I don't think people themselves know what all they own. Okay? When you make a list for yourself, you will forget how many bank accounts, how many mutual fund folios you've been collecting all your lives. So financial advisor is dur ki baat. Yourself, your wife, you also don't know. Okay? So this is important. Do I have 10 minutes more? Ankit, Aditya? We do have? Okay, great. No, but it's also coffee time after this. So, okay. So private family trust. Now, wills we've discussed what wills are typically, how you can make. I'll explain it to you in a very quick while after this. But trust, yes sir. Sure. Sorry, gift happens while you're alive. So you can gift it to any relative. Someone else is gifting it to you. Yeah, that's possible. Yeah. Yeah, yeah. Yes. So whatever your OCI or card is there, with that you can gift, you can receive a gift also. Your taxation applies based on your residence. So I'm sure Shubham can help you out with that. But yeah, it's doable. So private family trust is a very upcoming concept in succession matters. You all would have heard of HUF, right? Hindu Undivided Family. People create those HUFs for some tax saving benefits, etc. What is a private family trust? It's very similar, okay? It is a new legal entity that I'm creating for the benefit of my family, right? Let's say I have $1 million, okay? I don't want to give it to my family in one go. I feel that, okay, it's a significant sum of money. They should get it slowly, slowly, so that they don't spend it like some psycho. There's a little child, he should not be influenced by someone, scammed by someone. So I want to keep the money safe for my family. So this is that safe, private family trust. I can write the rules that I want. So the rules, let's say I'm writing is, after my children turn 35 years of age, only then give the money to them. Or I say every year give them 5% of the wealth, rest remains in the trust. So whatever way I want to control my money after my death, only trust gives me that opportunity, will does not. How it looks like, I've created a very small visual. A private family trust is like a locker, okay? I'm putting in money into the locker, or let's say my parents in India are creating a trust, and they are putting their money in the trust for the benefit of their family members. I am their family member, my wife, my children, their other children, our grandchildren. We are all beneficiaries of this trust. This trust operates on the basis of a trust deed. So whatever I write as rules of the trust is what it functions by. And there are some managers of the trust. We are called trustees. This is the entire concept of a trust. There are a lot more complexities. I don't want to get into that, but this is as simple as that. We feel that trusts are not limited to the Tatas and Birlas today. Like Viljini in the last 2 years has made 200 trusts, okay? And almost 30% of them are from NRIs for their parents' Indian estate. So we feel that the knowledge of this instrument is important for everyone. Of course, you get the time to then explore what it looks like. Difference between a will and a trust. Will is a basic succession plan. Trust is a very secure plan. It cannot be challenged in court. So if you have more wealth, or you feel that some family members might be problematic in the future, trust is the way to go. For example, Sanjay Kapoor case, I don't know how many of you know. 30,000 crores still in litigation. A man with that much wealth is making a will. Not acceptable. Trust was the ideal solution for him. He went before his time. Isn't that what life is? It's unpredictable, right? So that's what we are suggesting. Secondly, will is a single document. Trust is a new legal entity that we are creating. Will can be done in 30 minutes, 3 days, 10 days at max. Trust takes between 3 weeks to 4 weeks to complete end to end, and it's a one-time process only. Finally, will can be done by a legal professional. There might be involvement of chartered accountant also when you're making a trust. Trustee, usually we say keep family members only. So if you are making a trust, you be a trustee while you're alive so that you can manage your trust. After your demise, you can say, okay, my child can be a trustee, or I'll keep a professional as a trustee. I want Ankit to be a trustee. So you can decide who you want to be a trustee. It can be external people also, managers. But beneficiary has to be only family members. So typically when we make trusts, we suggest that you don't give all the roles to one person. You divide the roles, that financial decisions will be taken by this person, legal things will be managed by this, etc. You can also keep a protector on the trust who is overseeing everything if something is going wrong. So any well-wisher can be opted. Yes, sir. So typically what happens is people who make the trust, law firms or investment bankers, their eyes are on the corpus of the trust, which is why it gets played around with. So when you have a neutral company which is not seeking your investments behind it, that is the right way to go. And which is why our role ends the moment the trust is made, we get out of their lives. They don't need to meet us anytime in the future. So that is when you know that you really, really have a neutral opinion on getting a trust made. Today in India, you won't believe there are investment companies that are giving trust for free to people. Why they are giving it for free? People should ask, Arey Baba, this expensive product, why are you giving it to me for free? Because they want your investment. So this is some dark pattern happening in the industry, but eventually people do realize it. That's right. True. Thanks for pointing that out. So we look at a very simple solution for NRIs. One is create a trust in India for the Indian assets. You can pour in your assets. If your family member, let's say a parent or a child, whoever there also has assets, they all also pour it into that. And you can be trustee in that trust. Remotely, you can, with a remote control, you can have a say in how that operates. Your children, your grandchildren can be beneficiaries of that trust. This is something that is working out so that you can invest via the trust also. The trust, let's say my name is Jugal Popat. The trust's name is Jugal Popat Private Family Trust. It has its own PAN card, own bank account. I open a broker account with Wealthy Nivesh now and I can invest in mutual funds. I can do whatever. I can buy land, sell properties, everything that an individual can do. So basically your taxation also gets much simpler with this structure that is created. Quick benefits, why a trust is better than a will for NRIs. One, there is no unnecessary India visits. Okay. Typically what happens is if someone in India passes away, NRIs have to keep doing back and forth a lot of times. In a trust, that does not need to happen. Without a single visit, the entire asset can be used by the NRI. You can mitigate inheritance tax, like we discussed in the beginning. Agar aage jaake inheritance tax aa jata hai, with a trust you are mitigating that. It is a very secure plan. You cannot be fought upon in court like a will can be challenged, even the slight possibility that it has. A trust is very secure. Business succession, in case you guys, anyone here has a business in India, this is the best way to plan business succession. Because you directly not want to share, give your shares of a business to someone. You would want to give a plan alongside it, which a trust allows. You can invest in India. And finally, it is an extension of a will. It is not will or trust. Trust goes alongside will. They both go hand in hand. Okay? Okay. UAE I will not cover because I guess people are here, Oman based. This was basically what UAE looks like. Does anyone here have assets in UAE? Middle East? No. Okay. So in case you don't have a will, the cost is 100,000 dirhams. Please make a will. That will cost is very little. But inheritance in UAE is very murky. Assets get frozen. This was something that I had covered in the last session. But I will cover what happens to my Oman assets. But I don't know if people choose to invest in Oman assets. Anyone holding Oman assets? Okay. I'll give you some idea, people, in case you're planning on investing in Oman. If you're an individual, you have a will made in Oman, smooth process, takes 3 to 6 months maximum. Cost is around 300 to 1500, okay, OMR. If you don't have a will, okay, and somehow you've gathered assets here, your home country law can be applicable. Let's say you're from India. India law can be applicable, but the process is very long. It takes approximately 12 months, take or give, and the cost is very high. Why the cost is very high? Because your family will have to prove that, okay, he was my husband, this is our marriage certificate, translated in Arabic. He was born on this date, this is his birth certificate, translated in Arabic. This is our, I don't know, any documentation that you basically have, you have to prove that you are a family member. You have to prove it in Arabic also, okay? So we are saying that all the documentation has to be done in Arabic. In case you don't have a will, I'm saying of that process. Death, birth, marriage certificate, your Indian succession laws. Let's say you have assets in India and you have assets in Oman. Your Indian succession certificate gathered from the Bombay High Court or the Delhi High Court, Bangalore High Court has to be obtained, which in itself takes 6, 8 months, 12 months. Bring it here, translate it, apostille it, and it involves the inclusion of Ministry of External Affairs, Embassy, and Ministry of Foreign Affairs. They all are part of that chain. There's a concept of ITC property also in Oman in case you are buying property. And then finally, if you have dependents, they are on your visa, they are your family. If something happens to you, they are on a notice period now, right? So we are saying that these are some things ideally planned beforehand are always good for family. How to make my will, these are 3 things. I'm saying that for Indian assets, make one will for Indian laws. If you have assets in other countries, let's say Oman or UAE or UK, US, make a separate will for that country in that language. Secondly, registration of Indian will is not mandatory. People feel I have to go to court, I have to visit the lawyer, I have to do XYZ. You can sit at home, create your will, sign it in front of 2 witnesses, any 2 friends, pick up your 2 neighbors. They can be your witnesses on the will. You don't have to go anywhere. And this will is perfectly valid in all courts of Indian law. Right? So we are saying start the process. Registration is not mandatory. Next time you are in India, you can do that. Or if you really want to do it at the Indian embassy here. That all is doable, but registration is not mandatory. And finally, you don't have to be there in person. To make a will of your Oman assets, you have to go there in person, right? That's the only difference. And finally, we help families in inheritance matters. So in case someone has passed away and you are inheriting that money or your family members are inheriting it, we do the start to end. So stage 1, stage 2, stage 3, getting court orders, selling that property, repatriating it back to you here in Oman, or wherever you are. That is our core expertise, and we've been doing this across the country. So yeah, that basically covers anything legal that you have in mind around your assets is where Will Genie can add value to your lives. Thank you. Do we have time for questions, Ankit? Or okay, questions, please. Yeah. Okay. Okay. So the question is, if someone has made a will, do they have to add asset values or mention percentages in distribution? So simply put, when you make a will for your Indian assets, you don't have to mention your value of the properties anywhere. You only say, okay, I have a bank account in HDFC Bank. I have a house in Hyderabad, this is the address. I have an FD with SVC Bank. You don't have to mention how much money is in that. You don't have to mention anything else. It is only there so that family can locate it in the future. And you can mention how you want to distribute it. You can say, all my assets listed here in this will, I want to give it to my spouse. Or you can say, house to spouse. Oh, that rhymed. Okay. Car to son, bank account to daughter. So you can give asset-wise distribution or overall distribution. So that is how distribution of the will. Okay. Yes. That gets frozen big time. That gets frozen. Day 1, frozen. And family can't access gratuity or whatever the allowances that come from the corporate that you're working for. All gets frozen until the entire process is over. If you have a will in place, that process gets over within 3 to 6 months time. And it's very minimal cost. If there is no will, that process they have to complete it, and they have to hire an Indian lawyer, hire an Omani lawyer, and both just chonk up the costs significantly. Do they? I don't think it gets frozen. You have to prove, the spouse has to prove she's the only legal heir for you, and there are no children, there are no other spouses, etc., etc. So that proof of responsibility to prove lies on the family members, like I written there. So it's a long process. Here in this country, sir, in this country we will have to connect with the local associate that we work with. This was a summary that I had prepared for Oman. Like, our expertise lies in Indian assets, but we can definitely connect you to a local associate here. Yeah, I would not like to comment on how the nomination here is treated, because I don't have 100% knowledge on that. Yeah. Sir, I don't know how the logic applies in Omani law here. We'll have to check with the local associate is what I'm saying. Yeah. So, very good question. What happens if I buy new assets after I make a will? Very high likely scenario, aaj will banaya and then 2 years later I bought a house, 3 years later I won a lottery, okay? If I die after that, who will get that lottery money? So we are saying that when we make a will, we write in that will who will get my future assets. So there's a future assets clause that today is 5th of June. Any asset that I buy after 5th of June will go to my wife only. So that is written in my will. I don't need to make a new will then.
What about the trust?
What about?
Same thing in the trust. If suppose I am having built a trust today,
yeah,
my assets quality changes or assets changes maybe reduce or increase. How you will refine that one? ट्रस्ट में अच्छा उसके बाद जितना ही बाय होगा वो ट्रस्ट में ही होगा चाहे मैं बाय कर रहा हूँ वो भी ट्रस्ट में ही जाएगा
You can decide. So typically
हाँ ओके वही ओके अच्छा
you can also
अभी जितनी है सारी सब कुछ उस पे चला
आप
जाएगा
ट्रांसफर भी कर सकते हो your mutual funds you can transfer to the trust also.
Okay. So that will be in that. Okay. Thank you.
Yeah. Yeah, absolutely. So if you made a will for 10 assets, okay, and then you decide I want to sell 2 of them, you can do it. Will remains the same. When family will open the will, and in case you are not there, the 8 remaining assets will be distributed. That's it.
Thank you. So that brings us to the last session of the day. Thank you, Jugal.
Thank you
Thanks
so
a lot.
much.
I'll just take 5 minutes on how we review the existing portfolios. Will anybody like to volunteer on how they select mutual funds for those who do it themselves? Okay, great. Thank you, sir. Please. Now, okay? Okay, great. So my question is, a lot of us do our mutual fund, and let's limit it to mutual funds only, mutual fund investments ourselves without taking help or advice of anybody. So those of you who would like to volunteer, I will love to learn their parameters basis which they select mutual funds first. And second, how do they build their mutual fund portfolio? Yes. Over to you.
I started reading magazine, watching podcasts and all this. Started like 30%, 20%, 50%. Then later on, influenced by many press news and all, ended with a research magazine, Value Research or something. And one fine day, they said, I think you are pulled in the many direction. Better you go with AI. So I started even with the AI consultation. But end of the day, there is no single point solution, what is a fixed thumb rule or anything.
So to summarize your point, you look at public sources like online, and then you have started asking AI how you should build it. That is one part. Yes, sir, Rajendra, sir. So discussion with Rajendra sir was very interesting when I met him when I was in Feb, because he was saying most of the things that we say.
Thank you very much, Ankit, for those words. No, actually, I have been investing in mutual funds for very many years, maybe 30, 40 years. So what I have been doing progressively, every 10 years I keep reviewing and seeing. So when I used to be, say, 25, 30, I used to invest in mutual funds which are a little bit risky. Some you take, again, you allocate your savings into different types of mutual funds. Say, for example, if your savings is 100 rupees, you would go for maybe 30 rupees mutual funds, which are very safe. At that point in time, the long term, the large cap used to be very safe. Today, I may not repeat that. But at that point in time, yes, because you at least get very good dividend and you would at least earn about easily 10, 12% every year on that. And then you go to the mid cap, slightly risky. Then you go to the small cap, which are little more risky. Go by percentages that you allocate. But as time progressed, so many varieties of mutual funds started coming into the market. Then obviously you have to keep up with the time and change this strategy. For example, what was discussed in the morning and what has happened in the last few years, multi-asset funds, for example. This has been one of the very, very popular funds and probably one of the most paying funds, especially for a person like me who has retired now. Because the risk is less, the portfolio does well in any type of market. Because it's a combination not only of shares, mutual funds, assets, gold, metals, everything. So it depends again. And then there is one last new category of mutual funds that you get are, thematic. You have IT, you have defense, you have so many pharma and things like that. Those are again risky unless you are very, very knowledgeable in that particular area.
So let's say they are cyclical. Let's say they are cyclical.
Absolutely. And there are so many new, hybrid funds. We have multi-cap funds. There is no end to invention of mutual funds. The industry has sprung so much that practically you are spoiled for choices. The most important thing is look at your risk. What is it that you expect from this? And then only make investments accordingly.
So why I said that Jugal's session will be last, because this session was planned last evening only, so I didn't remember that we have this session also. And the reason behind this session is in last 3.5 years, we would have analyzed, I think, around 2,000 portfolios. And we thought that we will share our learnings of analyzing those 2,000, 3,000 portfolios and what we have learned in those reviews. And what we have seen, good or bad, in those reviews. A very, very common question that as wealth managers we are asked is, what value will you add? Now I try to answer it to the best of my capabilities, but I honestly bring that we bring clarity and we bring a proper framework on the table, which may or may not be there when people do it themselves. So as we can show, we have shown also from complexity to clarity. But having said that, I'll share some of the insights that we have seen in the portfolios that we have analyzed till date. One observed issue is over diversification. So there have been enough number of studies which shows that diversification helps you only up to one extent. So my father says कि जरूरत से ज़्यादा तो दूध भी जहर बन जाता है. Nowadays they call it lactose intolerant. The day I was diagnosed with the same, I felt that I have become very rich. That's why I have got, such rich people's issues. But the point is, if you over diversify, then the contribution of any single holding in your portfolio comes down drastically. So let's say you have got 30 mutual funds in your portfolio, with one mutual fund holding typically 3 to 4%. Even if that portfolio becomes 100 times, 2 times, then effect on your portfolio will be 3-4% only. Also, they say that little knowledge is a dangerous thing. Diversification comes basis coefficient of correlation only. Coefficient of correlation means if I am moving in X direction, in what direction is other asset class moving? If they are both moving in same direction, then there is no benefit of diversification. So one issue that we have noticed is over diversification. With very high number of funds in the portfolio, we try to limit it to 10 to 12. The most entertaining exercise for me when we, bring other people's portfolio from outside to us is this exercise only. जहाँ पे सबसे पहले हम ये करते हैं, इन मैनी टाइम्स पीपल डोंट हैव देयर नॉमिनीज अपडेटेड, देयर बैंक अकाउंट्स अपडेटेड, देयर एड्रेस अपडेटेड, देयर फ़ोन नंबर अपडेटेड. सो फर्स्ट हम उन्हें ये सब बना के देते हैं कि आपके इस फोलियो में ये नॉमिनी है, ये एड्रेस है, सो दैट दे एटलीस्ट गेट ए होल्ड ऑफ सच क्रिटिकल पैरामीटर्स. उसके बाद जो अगली एक्सरसाइज आती है वो यही आती है कि वी ट्राई टू कंसोलिडेट देयर पोर्टफोलियो एंड एलिमिनेट टू मच डाइवर्सिफिकेशन फ्रॉम द सेम. Now second, to add on to what Sir said, thematic, and Sir rightly pointed out that it's a very risky. I would prefer to use the term cyclical, that they are very cyclical. Now when we were talking about geographical allocation, when Umesh sir discussed about it, we do believe that we have limitation, that we are not good at picking up the cyclicity of stocks or asset classes. At least we won't make that as cornerstone. हम कभी भी आपके पास आके ये नहीं कहेंगे सर हमने ना चाइना मार्केट में 2 साल पहले लगवा दिया था. कभी भी हम ऐसा नहीं कहेंगे. जो भी हमारे क्लाइंट्स यहाँ बैठे हैं वो अच्छे से इस बात को जानते हैं कि हमने कभी भी इस तरह के ओपन एंडेड या हमने कभी भी इस तरह के एक्सट्रीम स्टेटमेंट्स नहीं दिए हैं. जब भी हमारी कोई कॉल सही गई है तो उसमें भी हमने यही कहा है कि अभी ऐसा हो गया है, जरूरी नहीं है कि आगे भी ऐसा हो, इन स्पाइट ऑफ द फैक्ट कि हमारी 3.5 साल में सारी कॉल्स ठीक गई हैं. नाउ हैविंग सेड दैट, व्हाट वी डिड कि हमने एक स्टडी करी, जितने भी सेक्टर या थीमेटिक फंड्स हैं मार्केट में, हर कैटेगरी का हमने बेस्ट परफॉर्मिंग फंड उठाया. आई एम नॉट सेइंग अबाउट एवरेज रिटर्न्स, हमने बेस्ट परफॉर्मिंग फंड उठाया और फिर हमने उसकी कंपैरिजन करा लार्ज कैप, मिड कैप और स्मॉल कैप इंडेक्स के साथ. इन ऑल द केसेस सेक्टर फंड्स, बेस्ट परफॉर्मिंग सेक्टर फंड could not beat small and mid cap on a long term basis. By long term, I mean 5 years. In some of the cases, they could beat large cap index, but that again was for a very small period. So that's another insight that we have seen, that people rely too much on sector and thematic, but eventually they realize that it's not working for them, but it's about cyclicity. So हमारे 40% of the investors का आपको दो क्या धो एक बार ऊपर लेके जाओ ना वो वाला पॉइंट. So 40% ऑफ द इन्वेस्टर्स का सेक्टिक और थीमेटिक फंड्स में ओवर एलोकेशन था, 40%, जिससे हाई साइक्लिसिटी है, टाइमिंग डिपेंडेंसी है, लिमिटेड फ्लेक्सिबिलिटी फॉर फंड मैनेजर और एंट्री एट पीक वैल्यूएशन. नाउ दिस इज समथिंग विच इज द बिगेस्ट विक्टिम ऑफ रिसेंसी बायस. भाई डिफेंस ने 1 साल में ना 100% का रिटर्न दे दिया है और उसे हम मान लेते हैं कि अगले 1 साल भी वही होगा. तो दीज आर सम ऑफ द problems that come over there. The third one is 67% of the portfolios are concentrated in very high AUM funds. जब हमने आपको अपना एल्गो दिखाया था कि how our algo works, तो हमने उसमें आपको बताया था कि हम ये देखते हैं कि AUM should be not very high, neither very low. So हम small and mid cap में जो रेंज रखते हैं वो 3,000 करोड़ से 15,000 करोड़ की रखते हैं. आई एम श्योर जो लोग यहाँ पे सीजनड इन्वेस्टर हैं वो मुझे 1-2 फंड्स गिनवा सकते हैं जिनका AUM काफ़ी ज़्यादा है, and they have performed good, no denying that, but still we go by our principle fundamental, because we have seen this thing happening again and again, that once fund sizes becomes a very high value, the returns starts coming down. And this happens more with older portfolios, because when they started, not necessarily that fund had so much AUM, but over a period of time they picked up the AUM. And that happens more with good performing funds, because first their M2M will be higher, and because they are performing good, they will get more and more money. So that is another observed issue that we have seen. These are the parameters on which we analyze your portfolio. AMC concentration risk. When we started, I still remember जब first time हमने अपना algo apply करा, तो हमने कुछ categories decide करी थी कि इन categories के mutual funds हम recommend करेंगे. And the first time we applied our algo, a particular AMC was getting first ranking in every other category. Yes. And still we limited that AMC to 15% only. Eventually that AMC ran into some issue, but that's not something that we could, predict. But point was, if we had concentrated our bets into single AMC, then we would have been caught with our pants down. So that is another issue, that 67% of the portfolios demonstrated high concentration is 1 or 2 AMCs. Now, when we started Wealthy Nivesh, we did a lot of research over a period of 6-7 months to see ki whether we suffer from confirmation bias. हमें लगा कि हमने कुछ ऐसा बनाया है which existing players are not using, but then we wanted to confirm that it's not confirmation bias. And what we did, we started analyzing industry on number of parameters. एक segregation हमने करा जिसमें we segregated AMCs basis their legacy and their way of working. So first and foremost was old fund houses, old तरीके. दूसरा था old fund houses, slightly experimental. I can take names of these categories when we meet in one-on-one. I don't want to take their names over here. The third was new kids on the block, more than 5 years horizon. And fourth was new kids on the block with less than 5 years legacy. We don't do any allocation in last bucket, but we do allocation otherwise in all 3 buckets. And in portfolio after portfolio, we see कि almost 60% of the money is concentrated in first bucket. Old fund houses, old tarike. Because we have, a level of certain conviction in those fund houses. There are certain AMCs which we have blacklisted from our recommendation. There are 3 AMCs, out of which 2 have been rated by SEBI, and third one defaulted on its debt funds. Again, I won't take names. We have blacklisted those AMCs in the sense we never recommend you any fund of those AMCs. But again and again, because one of those AMCs is a subsidiary of a bank, of a private sector bank, so people think that it's bank, so it's safe and all those misconceptions. But again and again, we see that a lot of portfolios that come to us for review have got those AMCs in their portfolio. और जब ये आते हैं तो जब मैं काउंटर क्वेश्चन करता हूँ सर आपने ये क्यों नहीं निकाला, आपने क्यों रखा हुआ है, रेट पड़े हुए 4 साल हो चुके हैं, 5 साल हो चुके हैं, तो इस तरह के जवाब आते हैं विच आर नॉट लॉजिकल. आई बी ब्रूटली ऑनेस्ट ऑन इट. मतलब वो कहेंगे कि यार ये है वो है फलाना ढिमका. फिर मैं उनसे पूछता हूँ कि 45 फंड हाउसेज हैं, देयर आर 45 फंड हाउसेज इन इंडिया. Out of 45, typically people are invested in 6, 7, 8 fund houses. So why do you want to be invested in that one particular fund house only? Why can't you take exposure in another 44 fund houses? Recency bias. So there is a very amazing book, The Art of Thinking Clearly, which talks about 99 psychological biases that we suffer from. उसमें से जो 2-3 इन्वेस्टमेंट के लिए काफ़ी रेलेवेंट है, उनमें से एक है कन्फर्मेशन बायस, एक है रिसेंसी बायस और एक है हर्ड बायस. टिपिकली रिसेंसी बायस और हर्ड बायस एक साथ मैनिफेस्ट होती हैं, जिसमें ये होता है कि डिफेंस ने 1 साल में अच्छा रिटर्न दिया है, मैं डिफेंस में ही पैसा इन्वेस्ट करूंगा, या इस फंड हाउस ने 1 साल में अच्छा रिटर्न दिया है, मैं उसी में पैसा इन्वेस्ट करूंगा. These are some of the biases that we keep on seeing getting manifested in the portfolios that are shared with us, which we believe should be avoided by the investors. इस PPT में what we have done, we have shown the issues and we have shown how we mitigate these issues. We believe we are risk managers, but we also believe that we can't eliminate risk. We can either mitigate it or we can manage it. There was one time when one of our recommended fund houses had an issue and we gave a simple exit call on the same. So we never make a claim that whatever we recommend to you will turn out to be good, but we know there will be a course of action for the same. क्लाइंट के लिए क्या क्या आउटकम होते हैं इस एक्सरसाइज से? एक तो क्लीनर मोर एफिशिएंट पोर्टफोलियोज. सबसे बड़ा कंफर्ट तो मुझे लगता है कि उन्हें पता चल जाता है कि नॉमिनी कौन है. आई स्टार्टेड माई करियर इन दिल्ली in ICICI Bank Wealth Management team, and believe me, if I start telling you the stories of how portfolio advisors or independent financial advisors work, you will stop investing. There are instances where people have put in, where independent financial advisor has put in himself as a nominee, but the most common is कि nominee है ही नहीं, which is the most common one. क्योंकि in good old days when you used to do it by form, so there was an option of mentioning nominee details, so mentioning I don't want to nominate anybody, so any third person filling that form on your behalf will think कि क्या नाम लिखना, सृष्टि संगल यहाँ पे टिक लगा दो, I don't want to nominate, मेरा काम कम होगा. So those are some of the things that we help you with when you share your portfolio with us. Cleaner, more efficient portfolio. I hope everybody will agree कि अगर कम फंड्स हैं तो कम टेंशन है, ज़्यादा फंड्स हैं तो ज़्यादा टेंशन है. better visibility and control. You have more visibility and you can track your portfolio in more efficient manner, improved risk-adjusted returns. I told you diversification stops working beyond a certain number of underlyings in your portfolio. Reduced behavioral and structural error, जिसका मैंने example आपको बताया कि sector funds या उन funds में invested होना, सबसे मुश्किल कामों में से एक आता है अपनी गलती मानना, और आपके फाइनेंशियल एडवाइज़र का काम यही होता है कि जो आपके पोर्टफोलियो की गलतियां हैं वो आपको ब्रूटली ऑनेस्ट तरीके से बताए. मैंने आज तक किसी को भी उसके पोर्टफोलियो की गलतियां पॉलिटिकली करेक्ट तरीके से नहीं बताई हैं. और इसका मैं एक एग्जांपल भी साइड करता हूं कि जब आप डॉक्टर के पास जाते हैं तो डॉक्टर कहता है इंजेक्शन लगाना है, आप कहते हैं मुझे दर्द होगा. दो तरह के डॉक्टर होते हैं, एक कहता है लेट जा, लगाना ही पड़ेगा इंजेक्शन, एक कहता है कि मैं चल दवाई दे के देखता हूँ क्या किया जा सकता है. करेक्ट डॉक्टर उमेश? So I am sure in all logical manner we will prefer the doctor who will say कि लेट जा भाई, इंजेक्शन तो लगना ही है, इसके बिना काम नहीं चलेगा. And that's how we also work. जो भी आपके पोर्टफोलियो के हमें लगता है, not necessary वो सही बात हो, लेकिन जो भी हमें लगता है कि इन चीज़ों पे इम्प्रूवमेंट की ज़रूरत है, we discuss with you in a brutally honest manner. So that's the long and short of it. Thanks for being such a patient audience. And we can end it. So we have a small video to share with you. We made it during the time of Dubai event. We do all our events in-house, so there are supposed to be some lapses also. Dubai वाले event में हम नहीं दिखा पाए थे. But यहाँ पे we just want to share it with you, and then we will call it a day after vote of thanks. But any feedback anybody has to share, good or bad? I'll prefer bad ones because that will help us to improve things. ये रिव्यू वाला एग्जाम्पल बता रहे हैं आप? कौन सा रिव्यू वाला एग्जाम्पल कह रहे हैं या कौन से वाला? वो मैं आपको बास्केट दिखा सकता हूँ हमारी. आई कैन शो यू आर बास्केट कि जो हम बास्केट बनाते हैं उसके क्या रिटर्न्स हैं. बाकी अदरवाइज आदित्य हैज शोन द पीएमएस रिटर्न्स, बट दैट्स ए आई थिंक दैट्स ए वेरी गुड फीडबैक. लेट मी शेयर द बास्केट विद यू. या सर. So let's agree to disagree on the same. And I'll tell you why. Typical commission on mutual funds is 0.7%. On insurance, it's 40%. So more often than not, insurance is a very missold product. I understand that insurance should go as part of the financial advisory, no doubt. But we believe that when track goes to insurance, lot many bad things also keep on coming into the portfolio. Also, I strongly believe that no insurance product in India is a good investment product. That's only a risk mitigation tool that you can use. Probably we should have a, and yes, that's a very good insight, sir. And what we did now, we made a tool to judge your insurance requirement. So your insurance requirement comes down like this. It goes up. So when I get married, I have kids, आई हैव टू टेक केयर ऑफ देयर मैरिज, देयर एजुकेशन, एटसेट्रा एटसेट्रा. एक बार उनकी शादी हो गई, उनकी एजुकेशन हो गई, तो मेरी लाइबिलिटीज़ कम हो गई. So my insurance cover requirement comes down drastically. So typically by the time you are in 40-45, you have built adequate amount of assets also. So that way also, and what happens in insurance, you talk to any insurance advisor, he will tell you, sir, 75 साल तक का ले लो cover. 80 साल तक का ले लो, sir, पैसा तो मिलेगा फिर. Why? Because then your premium increases. And so does his commission. Yeah, so that's a time value of money that you are talking about. हाँ, पूरा टाइम है सर. Correct. सर देखिए, दो चीज़ें हैं कि या तो उस केस में ना फार्मा आपके पूरे पोर्टफोलियो को कवर कर ले, कि आप पूरे पोर्टफोलियो में फार्मा डालें, तब वो रिस्क मिटिगेशन होता है. और अगर आप पूरे पोर्टफोलियो में फार्मा डाल लेंगे तो कंसंट्रेशन रिस्क आ जाएगा.
करने वाली है. In sense like if I give them premium, they de facto go and invest in the market, probably in a most inefficient way.
Sir, to be honest, I am not good authority on this because I am not aware of health plans available in Oman. So I can tell you in context of India.
India के हिसाब से बोल रहा हूँ. So Oman में most of us are covered by law. Okay. So here in the next 5, 6, 7 years, if we can survive that long in job and in life.
So India के केस में एक प्रोडक्ट जो मुझे अच्छा लगता है मेडिकल इंश्योरेंस का, वो सुपर टॉपअप है, जो कहता है कि आप एक थ्रेशोल्ड डिफाइन करेंगे. तो लेट से आपने थ्रेशोल्ड डिफाइन करी 3 लाख की, 3 लाख तक आप पे करेंगे, 3 लाख के ऊपर आपका प्लान पे करेगा. अब वो मुझे क्यों अच्छा लगता है मैं बताता हूँ कि प्रोबेबिलिटी ऑफ यू अवेलिंग 3 लाख इज मच हायर देन यू अवेलिंग 30 लाख. तो जो 3 लाख से 30 लाख का खर्चा है वो उसे कवर कर लेगा विद मच लेसर प्रीमियम. तो उसमें आपका रिस्क ये हो गया कि आपका 3 लाख तक का रिस्क तो आपका है, 3 लाख के ऊपर का उनका है. कि आप कहो कि यार 3 लाख तक तो मैं झेल जाऊंगा या 2 लाख तक मैं झेल जाऊंगा, उसके ऊपर का प्लान झेल लेगा. सो दे कम विद लेसर अमाउंट, और आई थिंक दैट्स अ गुड प्लान फॉर इंडिया पर्सपेक्टिव.
So the first hit is on us, second hit on them, or first hit on them and second hit on me?
पहला
3 कौन भरेगा?
पहले 3 लाख आप पे करोगे. आप कहीं से भी करो, दे डोंट केयर. आप अपनी पॉकेट से करो, आप एग्जिस्टिंग दूसरे इंश्योरेंस प्लान से करो, आपका एम्प्लॉयर करे, कोई भी करे.
Essentially the bigger hit is taken by them. अगर बहुत बड़ा हिट आ गया then they'll take it.
चल रहा है. So just spare us 2 minutes to watch our video, our team video. We are a freshers company in the sense everybody is a fresher over here. We hire people typically fresher only, and they have made this video themselves, and they only have conducted this event themselves. So I'm sure you will enjoy watching this young people's video. We did not start with capital. We started with a vision. A vision at the intersection of client centricity, data analytics, market intelligence, and human expertise. That was way back in year 2022.
We don't chase returns. We are risk managers. And if we are able to manage the risk well, returns are bound to come.
From a team of 3, we built processes that could scale to 25 and beyond. From 1 CR to 1000 plus CR AUM in just 3 years.
Securing 1.8 CR in our first angel round during a funding window.
Followed by $1 million round that expanded our horizon.
From SIPs to startups, from Mumbai to Dubai.
From unlisted shares to startup investments, from bonds to PMS, from AIFs to Gift City investments.
From corporate FDs to citizenship by investment, family and estate planning, concierge services and many more.
Market don't move in a straight line. 2023 and 24, conviction was tested.
Amid turbulence, our strategies leaned on discipline, risk-adjusted call and data precision.
Our system don't blink in volatility. Real-time analytics, algo triggers, allocation engines has always kept us ahead.
For clients, that meant confidence even in chaos.
Wealth isn't just built on capital, it's built on clean, connected and actionable data. Every decision is powered by precision.
Our voice extends beyond investments. We created a space for learning, ideas and insights.
From Times of India Emerging FinTech Brands 2023 to the top 10 wealth setups 2024, each recognition reflected the trust of our clients.
Scaling isn't just number, it's relationship. Each one of them is personal.
Every success story is shared. Every client's milestone become a part of us.
Trust.
Growth.
Simplicity.
This isn't the destination. It's just a beginning to a smarter wealth journey.
So thank you, everybody. As I said earlier also, since yesterday we were getting these apprehensions that whether people will come. This is our 4th edition of Nivesh Milan, and believe me, every time we have this same apprehension only whether people will come or not. But still, all of you turned out in such a great quantity and quality also, in the sense that you continued sitting throughout the sessions. Probably sessions were good, you found them useful. And so the idea conducting Nivesh Milan is always to empower our client and to start conversation. So the idea is कि अगर आपने आज estate planning का session सुना है, so probably we can help you with their family estate planning. If you think that we can help you in TRC work, we can help you there also. But also to build up relationships with all of you, and this can also provide you opportunity to network among yourself. So thank you, everybody. Thanks for turning up. A special word of thanks to Nitin sir, Rao sir, Keur sir, Rajendra sir. These are some of our clients, Bhagwan sir, for turning up and helping us. I am also citing their names that you can, use them as testimonial providers, and you can ask them about their experience with us. Thank you, everybody. Thanks for turning up in good numbers. Thank you.